Very good morning, delegates. Welcome to the second day of 3-day workshop on goods and services tax. We have CAPT Raju with us to take us through input tax credit and inverted tax structure. May I now request the speaker to occupy the dais. CAPT Raju, fondly called as PTR, is a fellow member of our institute and a partner in a leading firm at Chennai. He ventured into professional practice after successful employment stints with a Big Four firm. He is specialized in and is now exclusively practicing in Indian goods and services tax law. His academics and scholarships are as follows. He is a qualified both a chartered accountant and company secretary, and also completed his bachelor's degree in business administration with the first rank from the University of Calicut. He also secured a scholarship from ICAI throughout his chartered accountancy course for his merit in academics. As a speaker and trainer, he has handled training sessions for the GST government department officials on various topics on GST. He is a regular speaker in the SIRC of ICAI on GST law. A well-known speaker in various micro, small, medium enterprise associations in India on Indian GST law. Invited by some of the leading commerce and management institutions in India for GST seminars. He has handled various customized corporate trainings on Indian GST law. He is currently advising some of the big multinational conglomerates in India having annual turnover of more than 500 billion rupees. He is advising economic wings of some of the top central government bodies on GST related matters for the benefit of public at large. In media, he has appeared in some of the national English news channels, both live and recorded discussions, and regional channels on GST discussions. With this brief, I present before you CAPT Raju. Please give him a big round of applause. Over to speaker.
It is indeed a great pleasure and honor to stand in front of you after for the 23rd session, right? I think this workshop is going on. This is the 23rd session of this goods and service tax workshop. So I'm very happy that I could be the part of this program since the beginning. I think from 2017 onwards. So very good morning to one and all present here. And I know that you would have all fought with the Chennai traffic, and you have to be the best driver in the world to reach on time. So everybody will prove your capability in driving every day in the morning, right? So to beat the traffic. So let me just get into the topic. First of all, let me thank the SIRC for inviting me continuously for GST sessions, and Indirect Tax Committee also for inviting me for some certification courses and all other programs of Indirect Tax Committee of ICAI. So with this brief introduction, let me just get into the topic directly, because already we are 18 minutes past. Because ITC is a big topic. As per my point, we can even talk about one whole day. That itself is not sufficient. But I will try to finish it off within 3 hours, maybe 1:15, Raman? 1:15, because my presentation will be for 3 hours. Out of that, we will take a small break also. Now, when we talk about input tax credit, the most important topic in GST regime, or even any indirect tax regime for that matter, input tax credit has a huge weightage. Could you tell me what is the reason behind it? Anybody? Huh? Money. Yeah, correct. Absolutely. See, wherever I present input tax credit, I used to say that if you know input tax credit, 70 to 80% of your problems are over. You know why? Mainly, if you take the last indirect tax regimes, whether VAT or service tax or excise for that matter, 70 to 80% of the litigations are only on ITC. Remaining maybe 10 to 15 would be on revenue, and remaining for other aspects. So why is so much of litigation, why so much of importance have been given to this input tax credit? First we have to understand that and appreciate it. See, mainly the department is looking at the revenue, right? So how can they make revenue? Revenue in the sense tax collection, I would put it that way. There are two ways, mainly two ways. One is
collection.
collection, disallowance. That is mainly, I will put it this way, revenue and input tax credit disallowance. So revenue, what will happen? The department will say it is a supply, we will say it is not a supply. Department will say it is we will say exempted supply, department will say no, it is taxed at 28%. So these are all the examples for revenue aspects, but most of the companies, what they would have done is, they would have done a detailed analysis or research, or they would have already got an opinion on HSN code, SAC code, etc., etc. But it is very difficult to get an expert opinion or look into this ITC matters on a day-to-day basis, because the accounts department would be taking the input tax credit on a daily basis. And the complexities will be huge, and sometimes they will take the blocked credit, later only they will come to know it was a blocked credit, and sometimes they will not even take the credit under the impression that it is not eligible. Sometimes they will take the credit even knowing that it is not eligible. So different aspects can come, but these are all things which will not come into a expert's eye, probably the CFO's eye or the top level management's eye. So these are all the areas where department will be very keen on. So now how am I going to take this session? See, I think after the introduction of GST, this is 881st day. To be very precisely, this is 881st day. So I presume that all of you are aware of the basic provisions of GST. Doesn't matter, I will take you through how am I going to do the presentation. See, if I start talking about already good weather in Tamil Nadu, I mean in Chennai, if I start talking about theory, I know that most of you will start sleeping. Already good AC is working very well and good climate outside, so we will automatically fall into sleep. So what I will do is, I bring all my experience, I put it into different case studies. Starting from small case studies to a very complicated case studies. I only incorporated 9 or 10 case studies to cover all the areas, and there are more case studies, but very unfortunately in this forum I may not be able to present all case studies. Some are very complicated. See, when we talk about case studies, these are all real case studies where you cannot pick one particular aspect of ITC. Sometimes it will be very complicated case studies, but having implication of supply, section 73, section 74, section 7, section 13, 12, and section rule 138, everything will be put together into that. And some cases, even the case study which I am presenting was actually in front of the Director of Intelligence. So there multiple aspects would be there, and then I just took only the ITC part of it, and then I am just presenting it here. So how am I going to do the presentation today? So the session overview would be this: relevance of input tax credit, then relevant statutory provisions, issues, illustration, more case studies, some AR rulings and case laws which are passed by the High Court. Then what are all the relevant provisions of GST? So one is, these are all the definitions. Definitions are very important. All of you would be knowing that without understanding a word, we will not be able to read a language, right? So once we read a sentence, you have to know what is the exact meaning of that particular word. So for that, we have to understand the definitions. And definition of input services, there are a lot of definitions which are relevant definitions I have given. Concepts and provision, it's starting from 16 to 21. So today I am handling only section 16 to 21 of the CGST Act and its corresponding rules. So these are all the rules starting from 36 to 45, and some of the concepts I would be skipping, if like banking and all, I will just touch it upon, but I will not go in detail because I have to cover the major areas. And how is the presentation flow happens? So first we will take the definitions, then eligibility and conditions, blocked credit, reversal of ITC, availability of ITC in special circumstances, job work, ISD and banking, financial institution and NBFC. So definitions. So the moment I talk about definition, again we will fall back. So first what I will do is, I will give you a case study, you tell me how to solve it. Some of the case studies are not actually from my own experience. It's sometimes, we are fortunate enough to be contacted by the government officials for some cases when they are dealing with. They will ask us some doubts. At that time only we also come to know these kind of complications would be there. So some of the case studies, the first case study itself is from one government official. He asked me this doubt, and then we concluded on that. So what is this case study is all about? Critical provisions. I am referring to 263. 263 is nothing but the definition. So first we will just understand what is this definition. I will just give you a brief introduction about the definitions. 263 of the CGST Act defines input tax credit. So what is input tax credit? Definition is very, very simple. One of the simplest definition in the CGST Act. Very simple. Input tax credit means credit of input tax. That's all. So it looks like very simple. So when we go to the next line, what is input tax? Input tax has been defined under 262 of the CGST Act, where it says that input tax refers to a registered person, means CGST, SGST, IGST, UTGST, all these taxes received by a person on inward supplies. Inward supply, when you are purchasing something, you will get CGST, SGST, IGST, all these things, right? It's an inward supply. All these are included in that definition. Further, it goes down and says that all RCM credits are also considered as an input tax credit. But it says that tax paid under composition scheme will not be considered as an input tax credit. So let's go and then see the definition once again. It says input tax means credit of input tax. Input tax in relation to registered person means CGST, SGST, all these things are there, right? All of you have seen this. Now let me go to the case study and then we will come back to this. The case is, in tobacco industry, cess is applicable, right? Cess is applicable for tobacco. Tobacco industry is one of the growing industry in Indian market, having an annual turnover of approximately 5,000 to 6,000 crore turnover from export itself, and that too we are now pushing this tobacco industry, tobacco exports more into China. So what happens is, in tobacco industry, when they are buying the tobacco products to manufacture and then export tobacco products, they will be having a education compensation cess. When they purchase, they will have a compensation cess, and they got some transitional credit by filing Tran 1. They got some transitional credit by filing Tran 1. They also got some credit, input tax credit, by filing ITC 01. I am combining multiple case studies into one case study, so there will be some disconnection with the facts, but the essence only I am looking at it. Otherwise, if I have to take 20-30 case studies, it may not be possible. So I am just combining it. And ITC 02 credit. What is this ITC 01 credit and ITC 02 credit? ITC 01 credit means a exempted supply become taxable supply, or you are registering for the first time, or you moved from composition levy to normal levy. All these cases, it's precisely called 18 subsection 1 of the CGST Act cases. Wherever it comes, ITC 01 has to be filed. Whatever the credit for the last 1 year can be availed. Now, ITC 02. ITC 02, what is ITC 02? ITC 02 comes when 18 subsection 3 of the CGST Act comes into the picture. What is this? Sometimes amalgamation, absorption, demerger, merger, all these things happens, right? At that time, the merged entity is eligible to take the input tax credit by filing ITC 02. I got a beautiful case on that also. I'll just take up that case itself now. It is actually a bearing manufacturing company from Japan. They had two entities in India. One is in Sriperumbudur, exactly in Oragadam, which was a manufacturing entity, and they had one trading entity in Chennai city itself, because they are doing more of trading activities. So basically both are different entities, different PAN numbers, everything is different, but the holding company is located in Japan. Now this bearing manufacturing, what happened is, before GST resigned, because of some internal management rearrangement and all, the manufacturing company was continuously making loss and this trading was making huge profit. So they decided no need to have two different entity, they decided to merge it. Now merger, the facts are like this: the merger application has been filed on 1st of April 2017. Dates are very important. And by 31st, they got the order on 1st June 2018. So during 17-18, since the order has been received from NCLT on 1st of June, the financial statements got combined. Both the entities' financial statement got combined on single financial statement have been presented. So when at the time of the audit, GST audit, the financial statement which is given to you is a combined one. As per the Companies Act, the moment you file an application, the merger will be deemed to be happen, irrespective of the date of order. That is why they combined it. But as per the GST law, not the date of application, actually the date of order will be considered for the purpose of GST law. Till such time, both these entities will be considered as a distinct entity, not a single entity. As per section 80 subsection 3 of the CGST Act. Now the crux comes. Assume for a moment, if 80 subsection 3 of the CGST Act is not there, this company will say, from 1st of April onwards, whatever the supply made to my trading company by the manufacturing company, there is no supply at all. That is why they cleverly kept a section 80 subsection 3 of the CGST Act to protect this particular transactions. No problem. Now 1st of June the order has been received. Now what the company has decided, first file ITC02. After going through all these things, if it is more than 2 lakh, a chartered accountant has to be certified. So being advisor, it came to us for certification. At that time, we verified the eligibility under old regime, it was perfectly fine. Under new regime, it was perfectly fine. Some credits were there which were ineligible under the new regime, we disallowed it and then gave a certification. They filed ITC02. They got the credit. So the the manufacturing company filed the ITC02, the credit has reflected and the trading company has to accept the credit. So by going to the portal, the moment they accept it, you will get the credit automatically into your credit ledger. Now the crux comes. Last time when I was handling the session, I think when I was handling the session maybe 3 months, 4 months back, we only filed one ITC02. Now you know that this 2A is a flexible document. Credit will automatically come at later point of time also. So what happened is, first time when we filed ITC02, maybe around 30 crores of credit has been transferred to this account. So that has been closed. After that, they again started getting credits due to some debit notes, blah blah blah, invoices and other things. They started getting some, credits into their ledger. Now the first question is, can the company file ITC02 for the second time? This was a challenge before us first time. First thing, because even we consulted some of the commissioners, asked whether we can file ITC02 for the second time. So they said, only chartered accountants are only advising us. Again, you are coming back to us, will not work. You take a call accordingly. So as long as there is no provision to prohibit to file ITC02, we said let's go ahead and then take the credit because it was a huge credit. Around 2 crore credit was lying. So we filed ITC02. The only disclaimer which we made to the companies, we will try, but if the portal is not allowing, you will not get the credit. They said fine, doesn't matter, let's try. We've tried it. ITC02 credit has come successfully into the to the trading company's account. So now they got around 22 crores of credit, including ITC02 filed for the second time. So there is no restriction practically in the portal also. So we have availed it. Now we are waiting for the audits and other things. At that time we will see that. So this is the background for ITC02. Now my question here is, if the tobacco company exporting some tobacco, whatever the input tax credit lying in their credit ledger as compensations as transition credit by filing Tran 1 or Tran 2, ITC01, ITC02, can they apply for refund of these credits? That's a simple question which I am having. Basically what I am asking is, all these 4 are ITC or not ITC? I want your answers. This is not a one-side presentation. Let me make it very upfront. I don't want to speak for 3 hours. I want you also to be participated for the discussion, irrespective of whether it is a mistake or this is a closed forum and all of us are in the same line as far as our knowledge is concerned. Doesn't matter. Let me know. You can take the credit or not. Yes, absolutely appreciate. Anybody from the back side? Sir? Yeah. You only, no problem. Yeah. Sir, can be taken? Taken. All of you say it can be taken. All of you. How many of you say it cannot be taken? I need some opposition. Please. Sir.
Only after approval, only you can get the input. Still they don't got the approval.
It got, okay.
Here only got approval.
Here it got approval. It's got credited to credit ledger. That is the crux here. After credited to credit ledger, they are now applying to the department under 54 subsection 3 of the CGST Act for refund. For export, they can claim for refund. So when the officer was analyzing, he could see compensation cess, he could see transitional credit, he could see ITC01 credit, ITC02 credit. Now, assessing officer has to sanction this refund. Can he do that? Why, sir? No problem, I will not trouble you because I need an opposition. At least he said no. Anybody? I will support you, sir, no problem.
You can only adjust, you can't,
They won't give credit, it can be only adjusted. Okay, valid reason. Yes, anybody? Women empowerment. Any reply from your side? Doesn't matter. That's all. So let's look at the definition first of all. Can anybody see transitional credit in this definition? This definition is a copy paste. My presentation is just a copy paste of the provisions. Look at this. Input tax in relation to registered person means CGST, SGST, IGST, UTGST charged on supply of goods or services or both paid to him and include IGST charged on import of goods, then all reverse charge mechanism but does not include composition levy. Where is the compensation comes into this picture? There is no compensation, right? In the definition of ITC, there is no compensation. So in my view, compensation cess is not an ITC at all. First point. Now the second question you would be asking, what are you talking about? Already in the automobile industry and all, they are taking the credit of cess. So outward liability, they are adjusting the cess. Absolutely correct. It is not an ITC technically. It is basically a adjustment of outward liability by way of section 11 of the Compensation Cess Act, which gives the power to adjust the inward cess against the outward liability cess. So it is basically not a cess. So the question comes before the assessing officer is, if you look at 54 subsection 3 of the CGST Act, it says that ITC can be, accumulated ITC can be claimed as refund. So the moment you underline the word ITC, compensation cess is not an ITC at all. But what happened is, this technical issue was there. Subsequently, they issued a clarification. Circular they issued saying that, no, we will give you refund. We will give you refund because this was a technical issue. So, from my discussion, based on circular, compensation got out. That means, assessing officer will pass, the proper officer will pass your refund, including compensation because there was a circular issue. Otherwise, they will not. What about transitional credit ITC01, ITC02? These are all not the actual credit on inward supplies charged on any supply of goods or service or both made to him. It is not to him. It is by way of deeming fiction in some sections like 18.1 and 18.3. They are filing their ITC02 and then taking it. Tran 1 credit is not even a SGST, CGST, IGST. It was a SENVAT credit. Maybe service tax or excise or anything like that. So basically speaking, point number 3, 2, 3, 4, these are all not eligible credit as far as refund is concerned. As sir mentioned, you can absolutely adjust it against your outward liability. I am not even rejecting that. I am not even debating on that. I am only talking about refund of input tax credit. Okay, clear? So, yes, please sir.
What about fixed asset purchase? Input on fixed asset.
Huh.
He purchased some containers.
Yeah.
And he started leasing.
Yeah.
When we approached for a refund, they said we can't be refunded. Only we can adjust it. Is it correct?
Yeah, correct. because if you look at 54 subsection 3 of the CGST Act, anyway refund will be handled by another learned speaker. But I'll just tell you, they are using the word inputs. They are not using the word input service, or they are not using the word capital goods. So both cannot be considered as for the purpose of refund. They will not give you that. You can adjust it against your liability, because zero rated supply does not prevent you from taking your input tax credit. So it will get accumulated in your credit ledger. You can adjust it against your outward liability, but you cannot go for refund. That's all. So it is an eligible ITC, but cannot be claimed as a refund. Capital goods I am talking about. Now, all of you are clear? You are getting at least a new side to this particular definition, or it's an old school thought? I want your response. See, let me just repeat at the cost of repetition. Every time when I come to institute, I used to say, institute is the place where everybody will be like a military training session kind of thing. Everybody will be stubborn, nobody will smile, everybody will be like, I will not open my mouth, I know, I will not open whatever you say, I will not be participating. You speak, doesn't matter. But wherever you go, even I surprised in some of the government department officials training also, they are very participative. They had huge number of questions also. Anyway, I will just tell you one small experience with the government officials. So, I was handling one department official training. Obviously, commissioner will be there, all people will be there. So, after the end of the session, they will start asking the doubts. Some of you would have heard this before also, but still. So commissioner or assistant commissioner, they will start asking doubts. Okay, fine, doesn't matter. So what will happen? They ask me first doubt. Somehow I am able to answer it. Second doubt, third doubt, fourth doubt, fifth doubt, sixth doubt. Doesn't matter. All the officers, different officers. One will ask maximum one or two. They will sit and the session was going on. Finally, one guy from the back side stood up and then said, I have some doubts. I said, fine, please go ahead. I have more doubts. I said, no problem, please. I asked commissioner permission because it was already 5 o'clock. He said, no, it doesn't matter, Rajiv, you proceed. He asked the first question, answered. Second question, answered. Third question, answered. Fourth question, answered. Fifth, sixth, seventh, eighth. I got little confused. Something going wrong here. Eighth, then again ninth. Then I asked, sir, 1 minute. Are you really from department? Then he said, I am from GST help desk. So whatever help desk is getting the questions, he is noting down everything and then asking whenever the faculties comes, he is shooting it. So be participating in the session, then you can take away a lot of things. Because I don't make you a board, because I am not taking too much of theories, because I am bringing all my practical exposure which you can easily assimilate, because all of you are in the practice or most of you would be in the industries. Now let's look at the second case study on capital goods. Now we will take the next definition of 3 words: inputs, input service and capital goods. Now what do you mean by capital goods? First we have to understand what is inputs. Inputs, what it says, any goods other than capital goods is an inputs. Please underline the word, any goods other than capital goods is a other than capital goods is a inputs. So first we have to understand what is capital goods. They are saying capital goods means goods the value which is capitalized in the books of accounts of the person who availed the credit. It's very simple. If you are in the balance sheet, if you are capitalizing in the right hand side in the fixed asset, then it becomes a capital goods. That's all, very simple. I have a couple of issues in this. I will tell you what is my issue. This is also another real case study. My client is into manufacturing. They bought a machinery worth of 3 crores from Toshiba from Haryana. So the cost of machine is 3 crore. 3 crore. No problem. HSN was there, perfectly okay. Point number 2, they said, I will do X work sale only. From gate, you have to take the goods. Doesn't matter, my client said, no problem, I will arrange the transportation. They fixed some transporter. The transporter brought the machine here. Then installation commission was another 1 crore. Installation and commission was another 1 crore. For computation purpose, I am just tinkering the numbers. So 1 crore was the installation and commissioning fee. Transportation was another 50 lakhs. Now 1.5 crore has to be capitalized. In our books of accounts, under the Companies Act, what we will do? How much would be the capitalization amount? Can you just tell me out? 3 crore cost? 4.5? Absolutely right, sir. Your good name, sir? Mohan sir. Mohan sir is saying that 4.5 I will capitalize it. Anybody has any disagreement with this? I am not talking about GST, I am talking about normal income tax or Companies Act. Anybody has any objection? No, no. Now let's look at the definition once again for the GST purpose. What does it say? Capital goods means goods, the value of which is capitalized. So the 1 crore of installation and commissioning and 50 lakh of transportation, is it a goods? Is it a goods or is it a service? Service, agreed? So as far as the GST is concerned, what is the capital goods? It's only 3 crore and the GST on that is only, say for example 18% means 54 lakhs is the only capital goods ITC. Now you may be asking, why are you talking too much about this? Anyway under GST you can take the credit, entire credit, then why are you differentiating these two? Right, basically that will be the fundamental question. At the time of availment, no difference. But at the time of reversal, there is a difference. If there is an exempted supply which you are providing, there is a difference. So at the time of availment, no problem. But at the time of assuming that your company is doing exempted supply and taxable supply, Rule 42 for input and input services and Rule 43 for capital goods, both the formulas are different, numbers will be different. So you should exactly know what is a credit on capital goods. Now tell me, how do I handle this issue? Now, can I give 2 books of accounts for the purpose of GST? One for saying that no, this is input service only, so not to be capitalized. You can very well capitalize, but the problem is any goods. I will give you 2 scenarios. Scenario number 1, Toshiba itself is saying that no, I will do everything. I will transport it, I will do installation commissioning, I will ensure that testing is being done, I will ensure that everything is perfect. That being the case, it will fall into section 8 of the CGST Act. This will become a composite supply, HSN only will come. Right? Agreed? It's a composite supply, principal supply is nothing but goods and that only will come. So only HSN will come. In that case, I don't have a problem. Then I don't have a problem because there is no different services altogether. But if it is an individual supplies, as I given it in my example, will cause some difficulties for us. All of you would be for the last 2.5 years would be enjoying with the GST. What is there in it? Capital goods, capitalize it. Yeah, input, anyway, no problem. Now it's almost 2.5 years. Now you will start feeling the pressure. Because now when you go back, you will not get the breakup of it. So what is the solution to it? See, basically there is no solution available. Okay, you cannot keep multiple books of accounts. If you tell one corporate company saying that there is an issue like that, they will ask us, then you tell me what to do. You don't want me to capitalize. So what we gave an advice is, you capitalize it, I don't have any problem. You keep the numbers differently. So for example, one fixed asset for a machinery, they are using a word 001, use 002 or 001A for the services. At least tomorrow after 5 years or 3 years, 4 years down the line, you will at least get the breakup whenever there is a requirement of reversal happens, or even in the first year itself if you are supplying any exempted goods. You understood? So this is one important thing. Now they are using the word to be capitalized, books of which are capitalized in the books of accounts. What do you mean by capitalization? In India, we have plenty of capitalization. All of you would be agree that income tax capitalization is different. Then Companies Act capitalization is different. And now we have company policy, we have Indian accounting standard, IFRS, Ind AS, I don't know all these things, but still, I heard that there are a lot of accounting standards where the capitalization is different. Now tell me which one I should adopt. A partnership firm will say that no, Companies Act is not applicable, I will follow Income Tax Act. Because Income Tax Act and Companies Act is differentiating the capitalization, saying that ready to use you can capitalize only up to ready to use. Income tax says put to use. So there's a difference in capitalization. So you tell me which one I should adopt. Any idea? Like all of us have already capitalized many goods of goods, correct? Now after 2.5 years you are asking these basic questions, right? Now we have to again go back to the client and say that no, this is not the way, this is the way. It will be a difficult scenario for all of us. Huh? They will change the auditor. So, see, it's capitalization as long as the law is silent. Supreme Court in multiple verdicts said that if the law is silent, it is at the discretion of the assessee. Had the law had the intention to particularly specify capitalization, they should have done it. The parliament should have told that. Now, how do I substantiate this argument? It's very simple. Go to section 16(3) of the CGST Act, where depreciation, they are saying that if you are capitalizing the goods, if you are capitalizing the GST component under and claiming income tax benefit under the Income Tax Act 1961, then you cannot claim CGST, SGST as an input tax credit. There they are very clear. They are very clear. It's income tax. Here they are silent. So you take whatever capitalization which you would like to do. So now next issue is capital work in progress. Capital work in progress, can I avail the input tax credit? Capital work in progress. All of you know capital work in progress, which is not to ready to use or put to use, whatever the word you use. Now, capital work in progress, can I avail input tax credit? Yes or no?
Yes.
I want two answers.
I say yes.
Yes, very good. Appreciate your name, sir.
Mahagan.
Huh?
Mahagan.
Mahaganam. I appreciate all the responses which should be both contradictory. Otherwise, it will be one-sided answer. No, he says it is.
For the sake of telling yes.
Yes. Okay. Sake of telling yes, he said yes.
You wanted to answer, I say yes.
Definitely. So whenever they are saying no, you say yes. Whenever they are saying no, you say yes.
Finally, you will tell a circular and then we'll understand.
Yes. That's what we have to ensure, that the way it has to be done is, you have to be confused to the greatest extent possible. And then we have to take you out. That is the best way of presentation, in my view. See, you would have seen in your house, mothers will fill sugar into a bottle, right? What they will do, first they will shake it. After shaking only it will set properly. Then you can have more into that. I am just doing a shaking process now. Now, tell me, capital work in progress can be capitalized, or can I avail the input tax credit? No. Yes. See, the same example, machinery has been received in the factory, the same machinery, Toshiba machinery, but it is not for ready to use, just to receive the goods. No installation has been done, no commissioning has been done, no testing has been done. Can the company avail the input tax credit? Simple, the same example I can extrapolate and then give it to you. See, as long as there is no restriction for capital work in progress, as long as you receive the goods and you satisfy the conditions under section 16(1) and 16(2) of the CGST Act 2017, you are eligible to take the credit, subject to the blockage in 17(5) of the CGST Act. That's all. Very simple. They are nowhere in the GST Act they are saying that you should actually, the fixed asset should be ready for use or it should be put to use. There is no such words in GST. So in the same example, the moment you receive the goods in your factory, irrespective of whether it is in the usable condition or not, you can avail the credit. You can avail the credit. Can I move on? Now, next issue is under business. Yes sir, please.
That same case,
Yes sir.
suppose we can delay the taking of the credit.
You can delay, sir, as long as the government is concerned. If you are delaying, they are very happy. That is why they introduced the 36(4) of the CGST rule 2017 to ensure that you are not availing properly. So that is why they kept the 20% restriction also.
Raju, can you relate at a WIP versus the definition of the capital goods and then say it can be taken. That will be more.
No problem. Sir is asking the capital work in progress, you take it along with the capital goods definition and explain to us. Very simple. Look at the capital goods definition. Capital work in progress, is it capitalized?
Capitalist.
Capitalized, agreed? Then no problem at all.
That's the logic I applied.
Yes. That's all the concept is all about. Has it been capitalized? Yes, it is capitalized. But it is not moved to fixed asset. No problem. Just a thumb rule, sir. All of us are experts in balance sheet. Look at the balance sheet. Is it coming in the balance sheet? It's a capital goods. Very simple. If it is going to P&L account, it's a input or input service. That's all. Now, issues in capital goods. So, this we already discussed. Now, next step. See, some case studies, as I said, will move like anything. Now, let me just take one small example, one small issue which we faced. One company in Sri Perumbudur, they are into manufacturing. So, obviously, you know that they had around 600 employees working in their premises. Now, this 600 employees means if it is as per Factories Act, if it is 200 to 250 employees, if it is above that, you have to have a canteen facility there. Agreed? All corporates, all factories in Sri Perumbudur or Oragadam, you can see canteens. Now my question is, first pointer, the transaction between employer to employee, supply of food, is it a supply? That anyway you would have already, the learned speakers would have handled it. I am not getting into the supply concept. I am only presuming why it is supply, blah blah, that thing I am not handling. But I have a beautiful example in that. I'll just take 2 minutes away and I will explain you what exactly happened. This company had 600 employees. Out of that, 300 employees are contract employees. They are not into the payroll. Now, based on the discussion, based on Caltech Polymers AR ruling, though it is not binding on us, some of the principles are making sense to us. So what happened is we said canteen supply is taxable. Okay, no problem. The company said we will pay. But the companies will not accept as it is, right? They said, what did you say? I said transaction between employer and employee. They said 300 employees are not my employees. They are contract employees. They are not into my payroll. I cannot call them employees. So what we did, the bill for monthly bill was around 20 lakhs and 2.4 crore was the annual bill for food and beverages. That we have divided into two because only 300 employees are related parties, so we took only half of it. So this is part of valuation. Then how do you value? So you got 1.2 crores as value plus none of the conditions under section 15 read with the rule 27 or 28 or 29, nothing will stand, only 30 will stand, that is cost of service plus 10%. So what we did, 1.2 plus 10%, we added on that. What is the rate to be applied? Now I am coming to my topic. I did the valuation, supply, all these things. Now I am coming to the applicable rate. The rate which is applicable to canteen is 9963, which is nothing but 5%. Canteen, very unfortunately, is falling into the category of restaurant services. As per the new amendment which has come very recently, maybe 1 month back, where they removed canteen and mentioned restaurant services under 9963, put 5% without input tax credit. In the bottom they defined what is restaurant service, which includes canteen. So basically canteen is 5%. Can restaurant avail input tax credit? You tell me, can restaurant avail input tax credit? So can canteen avail input tax credit? When both of them are same, can you avail it? Yes or no? Absolutely right? Now my problem why it is coming is, because it is a taxable supply, it is coming under 5% under 9963, where the condition is very clear, you cannot take the input tax credit. You cannot take the input tax credit. Now that 5% will become a cost. Already the inward supply they are charging 5%, so it will become almost 10%, would be 10.1%. You know, the 10% margin also they are adding for the purpose of valuation. Total 10% would be the out-of-pocket expense for companies. Previously it was 18% previously. Now, one more question came during that discussion. The director asked me, Rajiv, I will do one thing. I will take 18%. Then I am eligible for input tax credit, na? Because during 17-18, the rate for canteen supply was 18%. It changed only from July 2018 by way of notification. So they said, I will avail the input tax credit, I will set it off, so no problem, 18%, 18%, I will pay the interest. But very unfortunately, there was another AR ruling where they, on Cafe Coffee Day, you know, all of you know Cafe Coffee Day, right? Where they said the same thing. I don't want 5% tax. I will pay it at 18% and I will take the credit. Because Cafe Coffee Day is not the normal restaurant where people will sit for a long time and then enjoy. So they are ready to pay even 18% GST. So Cafe Coffee Day applied, but AR ruling authority said, when there is a specific entry for you, you have no option to go to the alternative entry. This is what they said. So they are applying the same principles. When there is a specific entry, you have no choice to take another entry. So that is also gone. So now they have to pay that much of amount. But very unfortunately, in some of the industry, I heard that 17.5 canteen supply was blocked based on First Amendment Act. It is removed. All these things are being heard. That is removed. But see, to be very honest, even when Suresh Prabhu was the minister before the last election, we personally give a letter through a public forum to Suresh Prabhu to address this particular issue, because you only asked me to maintain the canteen. I maintain it. Now because of that, I am bleeding to the extent of 10%. So we already gave this, but very unfortunately he had only 2 months of tenure, that didn't take it up at that particular point of time. Now again we represented, hope that it will be taken. But very unfortunately they removed it. Their intention was very clear. They wanted to remove this blockage. But they didn't see that there is another transaction which is happening. Though you are removing from 17.5, there is another one 9963 which is waiting for you to block the credit. So these are all little complications.
I'll ask some question on this. When the employer-employee relationship is prevailing,
Yeah.
why the supply of food to the employee should be treated as a supply?
Yes. Any supply.
That's point number
Yes.
one. Point number two.
Can I answer that first? Because I will not be able to remember everything.
Then
First point is, any services by an employee to the employer is exempted by way of Schedule 3. Okay. So, transaction between employer-employee is only to the extent of employment, I would say. The employee providing service to employer only, Schedule 3 transaction. No, not supply of goods, not supply of services. As per explanation to section 15 of the CGST Act, employee and employer are related party. Now the problem comes. Any goods supplied by employee to employer also taxable. Any goods or services, I am very clearly using the word goods or services, provided by employer to the employee is also taxable, except in case of Schedule 1 transaction where they gave a 50,000 exemption for gift, only for gift. Please note that word gift, because in this canteen supply also the director asked me, anyway 50,000 is exempted, na? I will consider this as a gift. I said, sir, no. Gift has been defined, not under GST. GST, gift is not defined. Then we have to literally go to the Gift Act where it is clearly given voluntary in nature, not based on a contractual obligation. Now to get a substantial evidence, we have to rely on one major, or I would say one most important judgment from the High Court of Australia. Under the Income Tax Act, it came under 1968. Still they are following that judgment. That is based on some school related aspects related to contribution, income tax, blah blah blah. The issue happened in 1965, and 1968 High Court of Australia has made that what is defined, what is gift. Now still as on date, the Supreme Court, High Court and all, they are still following that judgment. And there also they are very clearly saying that it is voluntary in nature, not contractual obligation. And it is occasional in nature. Will you give gift to employees on a daily basis? It is actually based on a contractual obligation. Second is, it is not voluntary, it is actually compulsory as per Factories Act. Second is, will you give gift every day?
It is nothing but CTC to the company, right?
Cost to the company
I
only.
am giving salary, I am giving food.
Correct.
Then why it should
There is another press release came on this particular aspect. They said there are a lot of services which are some employee benefits also started, having a lot of grey areas. Then they issued a press release saying that if it is part of CTC, not included. If it is not part of CTC, it is included. After that only this, the air rulings and all come. They are saying that it is applicable because it is a supply. So that is not even a circular. It was only press release which has come. Now, okay. Now next is another case study. See
One
some.
more question.
Yes, yes, sir.
Only one
Yes,
question.
yes. Please,
Only
please.
question.
No problem.
The entire supply of food will be treated as supply of goods and then on which 5%.
Supply of service, sir.
Supply of service and then we have to pay 5%.
Yes.
Or only related to the contracted employees.
Only related to other than contract employees. Because contract employees, though you are calling it as contract employees, they are not in my payroll. So they are not effectively employee. They are actually manpower supply. I'll put it that way. But internally they are calling contract employees.
Their portion of food supply, how it is to be done?
Not required. This is a transaction between an unrelated party. There is no consideration, no taxability, because section 15 is very clear. Whatever the transaction value will be the whatever the value which you are putting into the invoice will be the transaction value, except in case of sole consideration or related party cases. Here there is no related party because contract employees are not related.
Employee is defined under GST Act.
No.
Then you have to refer the PF Act.
Yes.
PF Act says contract employee is also employee.
No. No. That is a very good point. No. Appreciate it. See, the moment you say employees, it has not been defined. You are absolutely right. Now the point is, as he is referring, not only under PF, it is under ESI also. It is a responsibility of the employer to ensure that PF, ESI, everything has been remitted and ensured. Even if the contractor is liable, not defaulted, it is the sole responsibility of the principal employer to ensure that PF, ESI have been deducted and then remitted to the employees. So in that sense, if you look at it, yes, I do agree, they are employees. But whether we need to invoke the provisions of PF, ESI Act is one judgment, one point which we have to look at it. If you are invoking, yes, it is also taxable. The 600 also it would be taxable. But that is the area where, since it is not defined and they are saying that only the payroll employees where we have commitment, blah blah blah. So all these things are part of my employment. It's a very good point.
Tomorrow they may also sue us.
Yes, definitely. See, whatever the judgment we are taking is not litigation free. That being the case, we will not have 1,700, 1,800 case laws as on date from the High Court, different High Courts. Most of them are e-wayable, but still. So, feasibility study report. Yes, sir, please. Yes, sir. You have to? No. See, what happens is you get the inward supply from an outdoor caterer. Okay, most of the companies are like that. Now, when you are doing an outward supply, you have two categories of people. Not only two, three would be there. One is contract employees, one is normal employees, and the last one is auditors like us or consultants. There are other people who will also go and then use that canteen. So, we and then contract employees, they removed it. And they are saying that these employer-employee only related, so GST is payable only on that. Now what is his point is, no. Yes. It's a free supply. So they are not anyway taking, if it is a free supply, it is coming under Schedule 1, sir. Schedule 1, it is coming as a free supplies. That being the case, you will not be able to take the input tax credit. If you are saying that free supplies, then you have to, if there is a even if there is no consideration, Schedule 1 will be applicable only for related parties. Only for related parties. Otherwise, free supplies means it will come to 17(5)(h). Free supplies, reverse input tax credit. Anyway, they are not taking the input tax credit. Okay. So,
how about issuing Sodexo book?
can I just move on, sir? Input tax credit, because this is coming under supply. I am discussing more of supply points than input tax credit. So that is what I said. See, input tax credit, I cannot take it one point at a time. It has a lot of impacts. So unless I will explain all these aspects, I will not be able to. That is why in the canteen also I moved away from supply. I am not discussing supply. I am talking only about input tax credit. I'll just move on, sir. because already he gave half time. Person has come and then said half time, it's a time for tea. We'll break after 20 minutes because just now we started. So now input service distributor. Now I have another case study in this. What do you mean by input service distributor? Input service distributor means the person who receives, it's an office of the registered person who receives the service and which are actually applicable, that can be distributed to other states. Now under GST, all registered persons are considered as a different entity altogether, right? Because that is why stock transfer is there. When the stock transfer happens, GST is applicable and all. So now my point is very simple. I am not complicating, I will just make it very simple. My company is located, head office is located in Kodambakam. They are a construction company where they had a branch across 18 to 20 states. They conducted their business meet in Taj Coromandel. Taj has given an invoice with the CGST, SGST. They gave it to my construction company. They said, don't give it to me, I have to distribute the service. You give it to my ISD. It came to the ISD and they distributed it. CGST, SGST can be distributed as an IGST. Is there any issue in this particular transaction? Is there any issues? Any issues, sir? No. See, as long as the transaction is concerned, there is no issue at all. But you look at little more closer to it. As far as that immovable property is concerned, place of supply is Tamil Nadu. That is CGST, SGST. Now he is distributing it as IGST. That is possible, but my point is little different. Assuming that the Delhi office, all other offices other than outside state, had they contracted directly with the Taj Coromandel, would they be able to take the credit? Now, what happens? What is not possible directly cannot be done indirectly by using a mechanism of ISD. You understand what I am saying? Assuming for a moment, instead of Taj Coromandel, assuming that they got advisory from me for the whole company, had I appointed directly by Delhi office, I would have charged IGST. Had the other states appointed me, I would have charged IGST. Had Chennai office, I would have charged CGST, SGST. But in the first case, whoever appoints, they will charge only CGST, SGST. So Supreme Court in many cases said, what is not directly possible cannot be done indirectly. Now, there is one High Court judgment also from the Court of Honorable High Court of Delhi, Deepal Travels, like Make My Trip. What they were doing, they were taking the bookings. So say for example, I am booking from Tamil Nadu, they are located in Delhi, they will charge me IGST. But the hotel will be booked in Rajasthan or other states. They will charge them CGST, SGST. They were not able to take the credit. Now they approached the Delhi High Court. Delhi High Court said, my hands are tied. You approach the GST Council. Now, some people who are much clever, what they did, under section 49 of the CGST Act, it says only CGST against CGST, SGST against SGST, IGST against IGST. They are not talking about Tamil Nadu SGST or they are not talking about other states GST. Correct? All of you would have seen, right? They are not talking about 28 states or they are not talking about that different adjustment. They are just talking about CGST, SGST. Some people have cleverly availed input tax credit saying that CGST is available to us. Some companies said both CGST, SGST are available to us. Say for example, in this particular scenario, say for example, Taj has, the Delhi officers directly gave the contract to Taj. Taj would have charged CGST, SGST. They went to Delhi and then availed the credit of this CGST, SGST. Can they do that? Some companies did that. Already came some AR ruling. IMF Cognitive, they applied for an AR ruling. They lost it. They went to appellate tribunal. There also they lost it. Followed by Storm Communication. They also applied. They lost it. It makes sense to me also. That is why I am taking this AR ruling. See, look at the concept of GST. It's a consumption-based tax. Consumption-based tax you cannot see in anywhere in the GST Act. though we are talking about consumption based tax, it's nothing but place of supply. Once the place of supply is in Tamil Nadu, the tax accrues to Tamil Nadu. Correct? Tax accrues to Tamil Nadu. So if you are charging IGST, the place of supply has to be mentioned and that will accrue to another state. So I want you to go through this AR ruling to understand what is the logic behind why they are saying CGST, SGST. One of, last time when I was in Ernakulam branch, one girl came and then said that my company is availing the CGST, SGST of the rent which they are receiving it in Haryana in their Cochin office. They said, be careful. I gave this AR ruling, they immediately reversed it. It's up to them to take a call whether they want to go for litigation or not for going for litigation. Even if they go for litigation, it is a benefit for all of us only. No, ultimately it will come back to us only. Now, some litigation prone areas. Normal loss, this was widely disputed under old, Senvat credit rules. Normal loss, process loss, abnormal loss, diversion of inputs, goods lost. I put 4 keywords for your benefit. Tell me, input tax credit is available on all these things. Assume that I bought some, see for manufacturing of this turtle, there will be some normal loss. Correct? There will be some abnormal loss due to the inefficiency of employee or whoever it may be. And diversion of inputs. Input has come, but it is not even used for the purpose of manufacturing. It would have used by the director. It would have lost. So whatever it may be. And goods lost. That is the last category. They would have lost the goods. Now my point is the input tax credit available in 4 cases?
1 and 2 available.
1 and 2 available, very good sir.
3 and 4 to be reversed.
3 and 4 reversed. Why 1 and 2 available? Why 2? Especially 2. 2 is the most debatable one.
Abnormal loss doesn't happen every day, right?
Normal loss happen during the normal process. Abnormal loss may not happen. That is mainly not because of the process, it's because of the inefficiency or various other factors.
So it is for the furtherance of the business only.
Sorry sir? Possible. See, look at the definition of business, where it clearly says that business include trade, commerce or manufacture. Have I used it for the purpose of manufacture? Then you are eligible. So in my view, normal loss and abnormal loss are available. There is an alternative view. Let me just make it very clear. Some people are saying abnormal loss is not available because there is no output. But in my view, look at the definition of business. Manufacturing is there. So abnormal loss can be considered as a business. So use it for your business. But diversion of goods is nothing. It cannot be taken. Then assume that they have taken some inputs and which is used for directors' personal purpose and all will not be considered. And goods lost. Goods lost means there is 2 different keywords. See, loss of goods and goods lost are different keywords under the law. Loss of goods is nothing but you are putting in the process and then you are losing it. Goods lost means in the first ab initio itself the goods has been lost, not even put into the business. So there is 2 key important words. Section 17(5)(h) talks about loss of goods versus goods lost. 17(5)(h) talks about goods lost, and these keywords, first 2 keywords talks about loss of goods. There is a difference. And annual maintenance service and insurance main contract services, these are 2 another litigation prone area, considering that what is the completion of service. What is the date of completion of service? All of you will be having annual maintenance contract in your office for at least for computer. Maybe it may be a small amount, but still. Now my point is, what is the date of only section 16(2) of the CGST Act says that you should receive the goods or service. In AMC contract, when will you receive the service? At the time of, I'll give you different dates. At the time of sign off, at the time of claim, at the time of completion of contract. Proportionate, very good sir. Proportionately, alternative number 4, happy. Proportionately, all are correct only. Who said that the date of completion is? All 4 can be disputed. See, when there is an alternative view which is possible, what view will the government will take? Which is beneficial to you assessee or which is beneficial to the department? Obviously, all of us are much experienced in this particular aspect. So they will say that at the time of contract sign off, you have not received a service. You just signed off the contract. Now let me make it very clear. Option number 2, 3, 4, sir, as your point also, the proportionate, there is a small issue in this. You have to read this particular point along with the section 16.4 of the CGST Act. Section 16.4 of the CGST Act prescribes time limit. Time limit is nothing but due date for filing return under section 39 for the month of September, that is nothing but 20th October, or the annual return filing date, whichever is earlier. I am just keeping the standard rules. I am not moving to the amendment which is being done in the order. I know that 2019 for 17-18 you can avail input tax credit up to 17, but I am just taking the future date. See, you look at that. As I mentioned, if the contract is entered in March 2017, what is the last date? I am just keeping 30th September as the last date, just for a moment, or you take the current date. What is the current date? Now, March 2019, you take March 2019, you entered into an AMC contract. If you are doing on a proportionate basis, you can take credit only up to 6 months, right? Because time limit is over by 16.4. You understand what I am saying? Sorry, sir? Supply is not over, but there is a time limit for availing input tax credit under section 16.4. It is based on the invoice date. Invoice date. For the limitation, it is last date for availing input tax credit because the invoice is pertaining to 17-18. Oh, sorry, 18-19. The 18-19 credits has to be availed last date as per section 16.4. So your last date is September 2019. So that is over. So if you are taking proportionately, actually those are not making sense to me also. But when there is a prohibition, you will not be able to take the full credit. Second option, the same example, if you are taking the last day, you are not at all looking at the eligibility because you will not be able to take the credit at all because it will be 2020 March. Again, you are not eligible. So considering this particular aspects to give a harmonious interpretation, to give effect to these particular provisions, in my personal view, avail at the time of signing of agreement. Otherwise, you will not be able to take the credit. Had the intention of the government is not to give you credit, they should have brought it into 17.5. But that's not their intention. By doing this constructive view of interpretation, in my view, you can take the credit. But still, let me tell you, I put it very clearly, litigation prone area. Yes, sir.
We raised the invoice, money is received, service is done or agreed to be done in due course of the business.
Service is received. There only there is issue.
Service is agreed to be done during the course of the time. So when out of the 3 conditions, 2 conditions are fulfilled. Where is the question of confusion?
You have to satisfy 16.2. Look at this, sir. You have to satisfy section 16.2 here. Goods are delivered by supplier. No, this is before this.
We will take up in the break, sir.
We will take up during the break, no problem. The 16. Received or deemed to be received goods and services. So there only the dispute will come. Now let's move on to the next one. Some important concepts. So this litigation is over. Now the condition to take the input tax credit. We'll break at 11:30. 11:30. Okay. Condition to take input tax credit. First condition. Every registered person subject to ITC rule 36 to 45. And in the manner prescribed in section 49. See, there are some drafting errors in the CGST Act. When they brought some additional section, they forgot to make proper drafting in this particular law. That is there from the beginning, but still here also there is a small issue. But let's don't get into those complicated issues. Let's make it very clear. Entitled to take the ITC charged on any supply of goods or services received to him, both to him which are used or intended to be used and which are credited to your electronic credit ledger. Now, I have 2 issues to be discussed. Major. First one is this ITC rule they are talking about. So many people will say that why should I comply with the 36.2 because even if the invoice is 5 minutes, it will be better. Even if I am having invoice, all particulars are there. See, initially when the GST law came, as per rule 36 sub rule 2 of the CGST rule 2017, it clearly said that invoice for the inward supply should have all particulars as per Rule 46 of the CGST Rule 2017. That is nothing but 17 particular line items have been prescribed. How many of us would have checked that? No, it is not practically possible also. When the law was prevailing at that time, we told our clients, you have to ensure this. Then they literally asked me, do you want me to check all 17 line items? I need 5 employees because some companies are getting 3,000, 5,000 invoices, inward supplies, invoices. Their government understood this issue. They subsequently amended on 4th September 2018. They came up with a notification 39/2018 dated 4th September 2018 to say that no, we don't require all particulars. We require only 5 particulars. What are all the 5 particulars? They said GST of the supplier and recipient and place of supply in case of interstate supply, description of goods, value and tax. If these 5 items are there, you take the credit. This is one most important thing which you have to check at the time of availing credit. Mandatory. This is not an optional one. When you do an audit, also you have to ensure that at least these 5 particulars are there in the inward supply. When you are doing test of details, you have to ensure that these 5 particulars are there in your invoice. Inward supply invoice. Outward, definitely it should be as per Rule 46. Now, my second point is on 36(4), the new rule which has come. All of you would be eagerly waiting for this, right? Correct? So, what is this 36(4) is all about? See, let me tell you 2 aspects of it. We always look at from the registered person side. I am also supporting registered person. See, let me tell you the practical issues which the government is facing. One query came to us from one of the economic intelligence side of one top central government authority, not the CBIC and all. They are all they are not from them, their side. The top central government intelligence team. We got a query. You tell me how the input tax credit can be evaded by the registered person. Give me all loopholes. All loopholes. We had to literally give a reply. And they gave an explanation also. Across India, the fraud which is happening on ITC is huge. So they said, you give me what is the modus of operandi. They used the word, still I remember, they said, you give me the modus of operandi for the purpose of this evasion. So government does, because imparting this 20% restriction on, they have some other aspect in mind. But since, see, the other side is government, the employee, the assessees, the registered persons are affecting because their working capital is getting affected. See, I have to see both the sides. See, one side they are also right, this side they are also right. So now, let's look at this provision. What is this provision is all about? They said you can take 20% of the eligible input tax credit. I will just slow down here because then only you will be able to appreciate this. So what is this 20% criteria which they are talking about? Let's move on to this. I will take this illustration. Assuming that actual amount of ITC which you are eligible by satisfying condition under 16.1 and 16.2 is, and removing your blocked credit. Blocked credit is not eligible, which is coming to 10 lakhs. I have taken for 4 months, it's 10 lakhs. Actual invoice is 100, 180. And but in your GSTR 1, only 6 lakh has reflected, 7 lakh, 8 lakh 50, 10 lakh. The GSTR invoices which are reflected is 80 against 100, only 80 has come. So government says that on the 6 lakh which is reflecting in your GSTR 1, on that you calculate 20%. So how much it will come? 7 lakh 20 is the amount which you can avail it as a credit. Now, second month when you come, it says that 7 lakh. That is available reflecting in my GSTR 1. See, first point is invoice numbers are not relevant. Please ignore this column 5 and 3 that I just brought it to you to avoid confusion. I said no for shaking. I'll give you maximum data to confuse you. So that is what I said. This is 3 and 5. Don't even look at it. Circular also came. They said they are not looking at party-wise reconciliation. You tell me the consolidated reconciliation. That's all. So party-wise you don't have to. Take the total of GSTR 1 and 20% on it. Now the second problem is GSTR 1, when it comes to me, it will be 2A. 2A is a flexible document. Every day it will change, right? So what is the cutoff date? They said no, you should take the GSTR 1 date as the cutoff date. So precisely you have to take it on 10th. 10th is the last day for filing return GSTR 1. So you cannot do it. So effectively you have to take it on 11th of the following month. That day credit only will be considered. Even if it is coming on 12th or 13th, it will not be considered. So credit comes 7 lakh 20. Now in the last example, if you see 10 lakh is available, I have only 80 invoices and I have GSTR 1 which is reflecting 10 lakh, but because last month and all some people did not file it, so now I got it. So 2 lakh is the 20%, so it is actually 12 lakh I am eligible. But what is the, what is the amount which is eligible for me to take the credit? I think there is some calculation mistake is there, I think. See that it is actually restricted to 10 plus 2. How much is the amount? 12 lakhs. But actually what is the credit available? 10. So it should be actually 10 lakhs, not 6 lakh. So that's a clerical mistake, sorry. Now, I will make it very clear to you, here onwards, the word which they always, when they come up with a clarification or anything like that, even in annual returns, they make a lot of confusions. Clarifications, circulars are issued for the purpose of confusion removal, but circulars are creating more confusions. What they could have done is, for the better understanding, they should have used the word unavailed input tax credit, eligible input tax credit. That is the actual word which they should have used there. Instead of that, they used the word actual amount of ITC. Everybody got confused. I got one Excel formula from one of my my office colleague. I mean, not colleague, my senior article assistant who did articleship in 1975 and all. He sent an Excel sheet and saying that, Rajiv, can you just validate it? I also got confused. Sir, so much of concepts are there inside this. I asked. He made it in such a manner that wonderful Excel sheet. But let me make it very simple for you. This is my own Excel sheet, my own formula. Assuming that first month your total credit is 10 lakhs and 6 lakh is available in your GSTR 1. And what is the eligibility? 7 lakh 20,000. 20% of 6 is nothing but 1 lakh 20, 7 lakh 20 is the eligible. Assuming that month, the second month, you don't have any credit at all, then what is the eligible, unavailed eligible ITC? 2 lakh 80,000. That is nothing but 10 lakh actually available. Government asked me to take 7 lakh 20 only. The balance is 2 lakh 80,000. Out of 2 lakh 80,000, my GSTR 1 will reflect 4 lakh. Assuming that everybody has filed returns. And 2 lakh, 4 lakh. But the total amount, how much they can take? 4 lakh plus 80,000. What is that? 4 lakh 80. But what is the actual amount available? 2 lakh 80. So ultimately 10 lakh, 10 lakh, 10 lakh will be. This example is from the circular. This example is drafted by me. This will make it very simple for you how it works. Okay. So shall we break? Yeah. No sir. See, if you look at here, you can see that GSTR 1, it is only first month, it is only 6 lakh. Second month it becomes 4 lakhs. Now everything has come. So total credit is 10 lakhs. Here also you can see total credit is 10 lakh. I have only 10 lakh credit. I have only 10 lakh credit.
Yeah.
You understood? So that is why I said it is a carry forward. It is only 10 lakh credit. Yeah.
Just now you said after 11th you cannot take anything.
As per circular, no.
Then how you are taking this 4 lakhs?
No, this is for the next month. This 4 months I am talking about the next month. This is month 2. This is month 2.
Which means I will keep raising only.
No, the amount which is reflecting in your GSTR 1. Yeah.
Meaning,
Next month? No, whatever you see, assuming that here 100 invoices have come.
sir, 1 minute.
Right? No, his point is absolutely valid, sir. That is why I just wanted to explain. See, he is saying that how do I segregate this 80 and 20? Basically, that reconciliation is required. That is what I am saying. Your point is valid. What he is saying is, though the circular is talking about the gross, fundamentally, reconciliation of invoice wise is required. Absolutely, that I do agree. That is what I am saying. That is what I said. The circular which is issued say that no invoice-wise reconciliation is required for the purpose of availment, but basically you have to keep a invoice-wise analysis to avail the credit properly. Okay?
Only overall limit I have to do like that.
Absolutely.
Otherwise, okay, why I have to overall invest?
Absolutely. As per book-wise, you have to go by invoice-wise only. Absolutely, really appreciate. We'll break for tea. I will take your question during the break, sir. Okay? Thank you.
எடுத்து டக்குன்னு நோ மெமரியும் காட்டும். நம்ம அங்கே இருப்போம் ரெக்கார்ட் ஆகி நிற்குதுன்ட்டு, அப்புறமா வெட்டி பார்த்தா
Can we move on? Yeah. So the first challenge which we had is on 36.4 whether the input tax credit 20% calculation. So let me just reiterate what I said. 20% will be overall credit which is lying. It is not based on tax, it's not based on invoice, it's not based on any other criteria. Total credit which is lying in your GSTR 1 on 11th morning. That is a cut-off date which they have given. They said 10th due date for filing the return under section 37. 37 is nothing but GSTR 1. So I know there are practical difficulties. One member asked me a few minutes back, do you want me to take the credit on 11th morning, first in the morning? Yes, that's circular, that is what the circular says. Even that is saying due date for filing return. So actually you have to take it on the night, 10th night at 12 o'clock you have to take the credit. So this is the status as on date. Now we will see what is the utilization. We had another issue. When the CGST Act, First Amendment Act came, we had another amendment on this ITC. What is this ITC amendment? Utilization of ITC. Initially it was pretty simple. CGST against CGST, IGST against CGST, then balance you can utilize IGST. This was the initial stage. Now what is the amendment which has come? Amendment is nothing but, they said, first you are adjusting against CGST. No, I will not allow you that. What you do is you take the input tax credit outward liability, the input tax credit of IGST, first exhaust it. First, I don't want to have any IGST input tax credit in your credit ledger. First you use IGST credit. Then if there is any balance in IGST, after say for example IGST payable is 20, you have 100 IGST input tax credit. First you adjust it against IGST, 20 has gone, balance 80. That 80, whatever the order you wanted to adjust against central tax and state tax, you can adjust it. Say for example on a conservative basis you are doing it 40-40. So matter is over. Now second thing they are saying that input tax credit of IGST has to be completely exhausted before you move on to CGST utilization. Now CGST only against first you have to adjust it against IGST liability, then only it has to be adjusted against CGST liability, and state next one and next one. So this is the order in which you have to adjust your liability. Anyway, I will be sharing the PowerPoint presentation also, and this has been inserted. This 49 has not been amended, but 49A and B has been inserted by the CGST Amendment Act 2017, which was got enacted or notified on 1st February 2018. Now what are all the requirements for availing the input tax credit? Very simple. Tax invoice should be there, or debit note, whatever the underlying document. Then goods should be received, goods or service should be received, tax actually paid, and furnished a return under section 39. What are all the other documents? ISD invoice, RCM invoice, all these things I have mentioned it. Now we will go to the next rule 36.3. 36.3 talks about, they are saying that no ITC of input tax credit will be allowed if you are paying any tax in pursuance of a fraud, willful statement and or misrepresentation. It is nothing but section 74 cases where you are paying any penalty under 129 or 125 or whatever, 122 to all penalty sections. If you are paying any penalty, that will not be considered as a input tax credit. I will give you an example. See, the problem is we are already at 12 o'clock. Okay, you want me to give more case studies or you want me to cover the topics? Case studies. You have to tell me. Huh? More of case studies or more of I want to cover it?
Case studies.
Okay, because where I am compromising is only banking, financial, job work, which I will spend the crux alone. I will be able to tell you. Okay, I will take the case study. This case also was in front of Trivandrum Director of Intelligence. I don't want to mention exact office, but Trivandrum, it was in Kerala. The goods moved from, there are 3 parties involved in this case study. I have also given this case study. There are 3 parties involved in this case study. One is party number A, who is located in Haryana. He is actually a construction equipment seller. Construction equipment seller. Party B, B is located in Chennai. He is nothing but a leasing company, construction leasing company. He is one of the top leasing companies in the country. Means, say for example, I am a construction company, I have to do some piling, they will be having the machine. If I have to do some, I need some JCB, they will be having the JCB. If any construction equipment for that matter, they will be the number 1. And my client is a ground engineering company, they are located in Tamil Nadu. Now, the Tamil Nadu, though the company is located in Tamil Nadu, it's a branch located in Kerala SCC because they got a new project there. Okay, so they are registered there, no problem. Now, there are a lot of complications in that. The goods purchased by B from Haryana. The leasing company purchased it from Haryana and told that the first leasing is in Kerala, you send it directly to Kerala. So they send it directly to Kerala. Now, B said, we already entered into an agreement with the Chennai office saying that so much of amount is the rental, 5 lakhs per month is the rental for 3 months. Every month 5 lakhs. Rental charges. They said we will be charging you GST, SGST. There is a supply concept involved in it. Actually they are supplying it to Kerala, but their contract is, underlying contract is with the Chennai office. It was an error made. Now the goods have gone from Haryana to Kerala. It was in the Trivandrum Info Park, the project. It was about to reach around 10 kilometers before the goods got seized. Goods got seized. They said, what is this all about? It's a big machine. It's a big machine. You know that 3 crore worth of machine means, you know how big it will be. It's actually 80,000 tons. 80,000 kg was the weight of that machine. I couldn't even believe that, 80,000 kg was the machine's weight. So it came in 3-4 vehicles. So it got seized. They said you pay penalty under 129 because e-way bill there was some deficiency. E-way bill there was some deficiency. It's a problem of that party. But address was given my client's name. So goods got seized. Notice was issued under 129. Notice is issued and said that I am going to charge 129 penalty for you. I am issuing this notice to my client. My client said that that is not my goods. It's your goods, you go and take it. But client, the party, the equipment lease renting party said, notice is issued to you only, how can I go and represent? Finally they all came together, all 3 companies representatives came. Director of this leasing company, that company, because it's a 3 crore worth of machine. They put a liability of 3 crore into 18% tax, 54 lakhs plus 54 lakhs penalty under 129. They said we are going to seize this vehicle. After 14 days they have the power to seize. Since it is a big case where huge amount is involved and there is a commitment to start the project there, this company said, the director called me and said, Rajiv, you go and represent because they already tried their all level best to release these goods. So since the amount was huge, they didn't want to take any risk. Then they said, Rajiv, you go and directly and then handle it. So the same day, morning I left to Trivandrum. I reached there by afternoon. I was talking to the proper officer who seized the vehicle. I told him that, sir, there is nothing like this, that. So they asked all the documents. That time only, after reaching Trivandrum only, I understood the case. Because on the way only, they started on the airport only, they were sharing all the documents. So I was going through all the documents. Because it was an immediate emergency case. So I went there. By the time proper officer said that no, nothing doing, I cannot release it. So somehow we convinced. By 8 o'clock, by 6 o'clock, we somehow convinced these two officers, proper officer and his senior. Now they said no, assistant commissioner is the person who can give an order because he is the actual proper officer. Then we waited. You would believe I was standing in the city for almost till 11 o'clock in the night because they took the file to the assistant commissioner office and he said because you are there, I was about to return on the same day, 5 o'clock. Then I cancelled my flight. Then the same day the officer said you stay back, you only convinced us, you stay back. So 8 o'clock this guy left to assistant commissioner office house and then he came back at around 11 o'clock. So we thought that no, they are not discussing the case, something else is going on. Obviously, something else is going on. But actually you won't believe, he said I will not release it. Next day morning he asked us to appear. So appeared in his office, he was very thorough with each and every element of that case. Then only I understood yesterday 3 hours not wasted for any other purpose. It's actually they spent time on this case because it's a huge case. Finally we convinced them. They said we will charge you penalty. You tell me. Then I gave an alternative option also. I said sir, goods you leave it. Anyway, I will give you can verify everything. Immediately we took the photo from the site, blah blah, everything we gave it. Finally we could able to convince him. Finally he said he noticed the rental agreement. The rental agreement, he asked, how can the rental agreement with Tamil Nadu when the goods are located in this particular place? So you have an evasion of tax. Happa, he left the 3 crores. Now he is talking only about 15 lakhs. So then we came to this particular topic. So somehow we were able to move away from goods. I know that if the bank guarantee is given to this particular thing, tomorrow they cannot encash it. Reason being, this is not this kind of supply related thing can be handled only by the assessing officer, that is proper officer. Only detention of goods can only be done by him. Finally we somehow managed and then got the bank guarantee. We gave the bank guarantee and released the goods. Now he did not pass any order, but he said the penalty would be if you don't submit so-and-so documents, still it is going on. They gave 3 months time. Then I will charge you penalty also. But somehow from 1.2 crores it came down to 12 lakhs. 6 lakh. 6 lakh is tax, 6 lakh is the penalty. Now assuming that this company, tomorrow we could not able to convince him, he will take that bank guarantee and then will charge 6 lakh tax, 6 lakh penalty. Now tell me, can the company avail the credit of the 6 lakh and 6 lakh penalty?
Penalty cannot be availed.
He is very clear, penalty cannot be claimed. So penalty comes under 17.5 HI, last entry, any penalty paid under 129 blocked credit. So that is blocked. Now my question is, tax paid, 6 lakh is penalty, 6 lakhs tax. Can I avail that? There 36.2 comes into the picture and says that tax also I will not give you the credit. 36.2 clearly says that I will not give you credit. 36.3 clearly says that no ITC shall be levied by a regime. Any tax that has been paid in pursuance of an order where demand has been confirmed on account of fraud, willful misstatement, suppression of acts, etc. etc. You may be asking whether there is any fraud, willful misstatement and all. Would you believe that will you get a notice under section 73 in future? Don't expect. You will get notice only under 74 only. 74 is for fraud, willful misstatement, etc. etc. 73 is for other than cases. Rarely you get 73. I will be surprised to see if any notice is issued under 73. Government department will not issue 73. Now, the first proviso of section 16.2 is, now we will discuss straight away without PPT, otherwise I will not be able to meet my deadline. So don't require PPT, so we will just discuss this. 17.2 first proviso says that if you are receiving goods in different lots, then you can claim the input tax credit when you receive the last lot. Say for example, in the same example, the goods were coming in different lots. Assuming that the invoice is raised in March 2019 and it is coming in 3 lots and the last lot comes after the due date under section 16.4, that is, it is receiving in November. don't you think that there will be a problem? If all lots are received before September, I don't have any problem, because I will be in line with the first proviso to section 16.1 read with the section 16.4 of the CGST Act. Now my problem is, if the lots are received after September, I will have a problem of availing input tax credit. So you have to be very, very careful. There could be multiple scenarios. One is, on the way goods have been damaged, they have to manufacture again. Second, there will be a flood or anything like that which caused some delay. That can also be possible. So be careful that there is a hidden provision which is available. The only provision under CGST Act to avail a credit of ITC for invoice pertaining to 17, 18 or any, there is no time limit, only and only one case. Any reversal happened under second proviso to CGST Act, that is 180 days, if you don't make the payment, it will be reversed, and subsequent availment based on the payment, then there is no restriction. So please note, only under CGST Act, only one exemption which is given for restriction under 16.4 is nothing but section 16.2 second proviso 180 days. Now what is this 180 days concept? It very clearly says that if you avail the input tax credit and you don't make the payment to the vendor within 180 days from the date of invoice. Please note, it's not your booking date or receipt of invoice date, it is from the date of invoice. If you don't pay within 180 days, reversal has to happen, and interest under section from how many days? 180 days. Then interest has to be paid from the date of availment. Interest is not from the date of invoice, but interest under 50 subsection 1 of the CGST Act at 18% has to be paid on from the date of availment. I will confuse you to the extent possible. I will hope that you will not get confused. I will give you multiple dates. You answer this. First, date of invoice. 2, date of receipt of invoice by the company. 3, date of booking. 4, date of availment. 5, date of utilization of credit.
Date of utilization.
Now for the first point, for the reversal, which one I should take?
Date of utilization.
For the reversal, date of invoice.
Date of invoice, correct.
For payment of interest,
Availment.
availment. What is availment and utilization? Availment is nothing but you are taking into 3B. That is availment. Utilization, you are using it against payment. But please note, interest, you can say that I just availed it but I did not utilize it, so I will not pay interest. No. The moment you avail it, government says that you have to pay interest. Clear? The practical issues. Let's talk about practically. How to find out this 180 days? Very difficult. Very difficult. Unless otherwise you have a sophisticated software to capture the date of invoice. How will you do as an auditor? How will you do the aging? Tally will give only aging from the date of booking. Some advanced features are there to capture the date of invoice, but I don't think many of the companies are capturing the date of invoice of the invoice of it. Now you have a problem of catching this particular complaints when you are doing your audit for 17-18. But fortunately, you have to do this aging exercise only for the month of January or December, January, February, March, 4 months. Because then only the 6 months will be over after introduction of GST. So just to take that aging and anything which is crossing first month, it doesn't matter. Mainly you will have issues from January, February, March only. January, February, March, you do the last date, you take the aging. Anything which is coming near to 4 months, ask for the original invoices, look at it. Why I am saying 4 months? In one of my experiences where I saw that it was a construction company, the invoice for inward supply will come after 2 months because it will go to the site manager has to approve, supervisor has to approve, their company manager has to approve. Finally it reaches the Chennai office, it will take 1.5 months. So on a conservative basis we kept the gap. So any invoice which would have reached 6 months would have booked only after 2 months later. So 4 plus 2, 6 months. That is what you have to literally look into, apply this logic. I am just giving you logic, how to apply this logic. Once you apply this, you will be able to take it. Only logic can take you to comply with this, because there is no provision as on it. If you are doing some companies, yes I know, some companies are capturing the invoice date, then no problem. Now, the last provision under this 16.3, no, not proviso, the 16.3 of the CGST Act says, if you are making payment to this reversal, that is 180 days reverse, no? Subsequently you are making payment to the vendor, you avail it in the year in which, or in the month in which you make the payment. That is what I said. Assuming that today you are reversing, you are paying after 10 years. You can still take the credit after 10 years. There is no time limit. This is the only case under CGST Act where there is no time limit which is going to hit. Now 16, all of you understood what this section is all about? 16 for eligibility and all. Now 16.3, it is nothing but on depreciation. 16.3 says, it is a very simple section. If you are capitalizing CGST, SGST and you are claiming the benefit of income tax depreciation on CGST, SGST or tax component, then you will not be able to take the credit. Very simple, that's understandable. Two benefits cannot be availed. Understood? Can I repeat or not repeat? Okay, I will repeat again. If you are capitalizing the goods along with CGST, SGST, no need to, you are not supposed to take the tax benefit, depreciation tax benefit under Income Tax Act. If you are availing it, you cannot avail the credit of CGST, SGST. Now, we will move to time limit 16.4. 16.4 is very simple, where they said the last date for availing creditors, due date for filing return under section 39 or annual, 39 is nothing but your 3B. Previously it was 3, now because of amendment they brought 3B with retrospective effect. So 3B will be your return under section 39. Now 3B date, that is nothing but 20th of October or annual return filing date, whichever is earlier. Now for 17-18, all of you know that the last date for availing credit has been extended to 31st March 2019, and there was plenty of judgment from some of the courts like Delhi High Court and all saying that no, you can take the credit because 3B is not considered as a return and all. So now all these things they understood, they made a retrospective effect, so you may not be able to take the credit. So March 2019 was the last date for availing credit for 17-18. 18-19 there was no subsequent order or anything like that. October 20th was the last date. Now move on to 17.1. 17.1, 17.2 and all talks about assuming that 17.1 you have both personal expenses and taxable. See, they are cleverly using not personal. That is what I use the word personal, because you have to understand that that is not the right word to use. They use the word taxable supplies for business and other than business. See, look at this word which they used. They are using partly for the purpose of business and other than business. They are not using the word personal. Please note it. It is not for personal. If you are using it partly for business, partly for other than business, you have to reverse the credit proportionately. This is all section 17, 18 and all for the reversal. 17 is mainly for reversal. So one is partly for business, partly for non-business. Second is partly for taxable, partly for exempted. 17.2. So I will give you an example. Again, I will go back to the case study. I will give you one more case under personal. This company is a fan manufacturing company. So be with me for the facts. I know that it's a long session of 3 hours. All of you have, after tea break, I can see the energy getting reduced. And because I am speaking, I am getting the energy. So all of you, can we do a small exercise with the due respect to all the senior members? Can we? With your permission, sir. I am waiting for your senior members' permission. Okay? Can we all stand up for a moment? Because some people are sleeping. Sir, if you don't mind, sir.
No, it applies to only those sleeping.
Okay, nothing like that. Okay, no problem. So can we do one thing? Because now we got a new chairman and we got a new committee which is being in place, right? We can just clap for a moment to appreciate all their efforts which they have taken so far to keep the Southern India Regional Council as one of the best for imparting the knowledge for both for industry members and for the purpose for the department officials. Can we just clap for a moment? Can we just continue for a moment? Okay, fine. Thank you. Clapping is very good actually. At least it has two advantages. One is the person somehow will get up. Second, those who are sleeping will get up because of the disturbance.
It is like a toll gate in highways.
Toll gate and highways. Yeah, correct. It's always better. See, 3 hour session, it's very difficult.
Third
So-
thing is you'll drop the mobile phone.
Huh?
Third aspect is you'll drop the mobile phone.
Ah, correct. Third is, he will get distracted. No, he will get distracted from the work which he's doing. At least now he will come back and then listen my speech. See, now this case is, this company is a manufacturing of fans. They were manufacturing fans. So it is in Ambattur. So they have an R&D division there itself, and they were manufacturing fans. Obviously what happens is, this company manufacturing fans were testing it in their R&D, which is a separate place altogether. And when I visited their factory at the time of GST advisory, they said, okay, I said I wanted to see your process, manufacturing process, your procurement, everything I wanted to see, and they invited me. I went and then saw the factory. They were using the same fans inside their office, administrative office. The whatever they manufactured, they are using for self-consumption. I said, sir, from where did you get this fan? They said, our own fan only. Then I said, sir, it's a captive, your own consumption. You have to reverse the credit. You know what he said? Rajiv, first you see, we have manufactured the fan. We are testing it in the lab. Okay, R&D. They are testing it. We are not satisfied. We have to test it on a real-time basis. So this is only testing. I have not completed my process. I said, fine, doesn't matter. You explain the same logic to the officer tomorrow. So let's see whether he will accept it or not. So anyway, the amount was minimal. They were using maybe around 100 fans or something. Even if you calculate 1,600, it would be a small amount. So I also left it. But these are all, actually speaking, you have to reverse. We clearly told them that you have to reverse the credit. But somehow they are very adamant and then they did not reverse it. No, but if you are an auditor, definitely you have to qualify your report, saying that no, you have to reverse it. Now, second point is, if you are doing both exempted supply and taxable supply. This is the area where many people miss out some points. See, I will tell you one another practical example which I come across. This company is a pharma company, manufacturing of medicines. It's not a allopathic medicine, but more of a Ayurvedic medicine. Nowadays, everybody will put some Ayurveda product into that and say that it's an Ayurvedic product. So they are also called themselves as a Ayurvedic. It actually comes in capsules. The cost of manufacturing is only 240 rupees because we have inside access, but they are selling it at 2,400 rupees. If you are buying for the first time, second time, they are selling it at 2,100 rupees. Huge profit. Fine. Now, what is my issue? My issue is very simple. They had two manufacturing plants, one in Karnataka, one in for supplying all the states in the southern part of India, one in north side. South side, they opted for job work. So I will purchase the material, give the material and get the specification done properly. In other state, north side, what they did is, they consider it as a sale. They sold it, they purchase it back. You understand? So one is job work, one is manufacturing. I was also wondering why you are following two methods. They said, no, it has been following from the beginning, blah, blah, and all. So now what happens is, when they purchase some product, there were some exempted goods. When they are giving it for job work, no problem, no reversal is applicable. The same product when they are selling, though that is not their main business, they are buying the raw material, exempted raw material, they are selling the exempted raw material. Reversal is required. They said that is not my sale. Their argument was this, that is not my sale at all. My sale is capsules, I am not selling raw materials. I said, but you are buying You are selling, you are showing exempted supply in GST return. When the auditor comes and says that reversal, they are saying that that is not exempted supply. Very clear. But we said, no, you have to reverse it because you shown exempted supply. Now what is to be done in exempted supply? When there is an exempted supply, you have to consider, you have to remove all your taxable, whatever pertaining to directly attributable taxable, no need to reverse. Directly attributable to exempted, completely reversal. Common credit, there is a formula which is given under 42 and 43, 42 for inputs and input services, 43 for capital goods, reverse it based on that. It's a very clear, simple arithmetical formula, you can go through it. I'll give you one more example. Plenty of examples, you should not get confused. Again, I'm telling you, this is because then you will be able to appreciate how these things are getting affected. Now, I'll give you a little more complicated example. This company was importing some goods, importing some raw materials, or not trading goods, it's actually trading goods. They import from UK, they keep it in the custom bonded warehouse. It's in the automobile industry. They import it and keep it in the custom bonded warehouse. So its import is over. As a company, I will not file bill of entry. I will ask my customer to file a bill of entry. The complication comes here. Customer is located in export oriented unit, EOU. They are in EOU. Now what happens is, because he is located in EOU, he will file the bill of entry. There is a customs notification where they need not pay customs duty, but they need to pay IGST. No problem. What is my problem? My problem is with respect to supply. Supply is there is no doubt. But there was a deemed export notification under 147 where it says that supply by a registered person to EOU will be considered as a deemed export. So if it is a deemed export, then I have to pay tax and claim refund. It's not a zero rated supply. It's actually I have to pay full tax and I have to collect it from the government. Alternatively, I can consider this supply as an exempted supply because Schedule 3 of the CGST Act 2017, entry number 8 says that any supply from custom bonded warehouse before clearance for home consumption will be considered as a Schedule 3 transaction. This amendment has come only by 1st of February 2019. That is why I said more complications. Now, first point is it a Schedule 3 transaction or deemed export transaction? If it is a deemed export, I have to pay tax and I have to collect refund. No ITC reversal impact will be there. But the moment you say that it is exempted or it is coming into Schedule 3, reversal is required. But be with me, that is what I said, it's very, very complicated. 1st April 2017 to 31st January 2019 till the First Amendment Act, this entry was not there in Schedule 3. 8th entry, that is home consumption, was not there. So what is impact? In the first CGST Amendment Act, they said 17.3 also they amended, saying that if the transaction is falling into Schedule 3, no reversal is required. No reversal is required. Now, first, let me take it based on a financial year. 1st April 2018 till 31st January 2019, reversal required because the entry came in 1st February only. 1st February to 31st March, reversal is not required. Did I confuse you to a great extent? Possible?
So is it not a curative in nature? Is it not a curative?
First, let me just check the feedback, sir, because no response after the case studies. You understood what I'm saying? See, because that's what I said, if I started taking complicated issues, then we will lose the thing. But these are all something which I cannot ignore also. See, for that matter, you take high C sale. Same kind of transaction. What will happen? The same client, I got one high C sale also. They imported from UK. It was in high C, they sold it to Sri Lanka. Because Sri Lanka region was also under them only. So high C sale, merchant export, that is from one country to another country export, I am being here, that is also Schedule 3 transaction. If it is not Schedule 3 transaction, reversal is required because exempted supply. Now what is exempted supply? 1 minute. What is exempted supply? Exempted supply for the purpose of CGST Act is defined under 247 of the CGST Act, says a supply which is wholly exempted under section 11 of the CGST Act or 6 of the IGST Act, or nil rated supply or non-taxable supply. Now let's go to non-taxable supply. 278 of the CGST Act defines non-taxable supply as supply which is not leviable at all under GST. These high C sale, all this bonded sale were not leviable at all till 31st January 19. So reversal is required. Post that, reversal is not required. Anyway, I know that I complicated the case study. If you could not follow, or if you are not able to follow that particular case study, please be in touch with me. I can explain it once again. As long as you understand, I can explain it. No problem for me. Because these are all real case studies. These are all rare case studies, You look at one particular transaction having two colors. Have you seen it in CGST Act? One is falling into export EOU supply, 147. Another coming into Schedule 3. Both are applicable. Now which one I should take? If I take this, impact is different. If I take this, impact is different. That one partly for financial year applicable, partly not applicable. So there are a lot of complication, but let's come back to our other discussions. So exempted supply, you understood? So in high C sale, I'll just give you in this example also, assuming that high C sale you are considering it as exempted supply till 1st February 2019, all my local purchases input tax credit, is it directly attributable to that high C sale? No. I just bought it, I am just selling it. So those are all directly attributed, local purchases. And the mainly on this high C sale, import whatever, assuming that you are paying some IGST. IC sale you will not pay any IGST, but if you are having any input tax credit with respect to that, any transportation, anything like that, that is directly attributable. Your laptops, your common credits, your office rent, everything is considered as a common credit. But they will ask, you will ask, I am not using my office. See, that cannot be directly, you can say that directly it is attributable to exempted supply. So the office rental, laptops, all machines, everything will be considered as a common credit, and then you have to reverse your common credit by using the formula. Understood? Okay. Now block the credit. I think we are well within the time now. I am able to manage by 12:30. I am able to somehow managed. Now can we move on? Now I think I can take up more case studies now again. Section 17. See the issue is, if I use my PPT, it will take time. If I don't use my PPT, I can finish it up like this. So I will stop using PPT. We will discuss. All sections we will discuss. 17(5)(a) of the CGST Act talks about motor vehicle blockage, blocked credit. 17(5)(b) talks about performance-based ITC like food and beverages, beauty treatment, catering, etc. Insurance, life insurance, health insurance. 17(5)(c) talks about works contract. 17(5)(d) talks about immovable property construction for on use. 17(5)(e) talks about tax paid under composition scheme, nothing but section 10 cases. Then F talks about non-resident taxable person excluding the goods which he imported. F talks about some tax payments, sorry, I am not able to recollect. E, F, G, H talks about goods lost or stolen, gift given. All these cases are coming to 17(5)(h), and I talks about 129 cases. Section what? Any penalty paid under section 129 or 74 or 130 as the case may be. So these are all the sections which we are going to deal now. Now, motor vehicles. The moment I talk about motor vehicle, first question comes. So repairs and maintenance, servicing of vehicles and the insurance, can I take the credit? First, it's disputed almost 2 years. before the CGST Amendment Act comes, before that we were disputing like anything. We were using some Supreme Court judgment saying that it is used the word in respect of means only means it's only on the vehicle, so you can avail the credit of repairs and maintenance. One FAQ they said you can avail the input tax credit, but state government started sending notices saying that how can you take the credit? It is not, they are using clearly the word in respect of, that means everything is included in that. They took a different stand. Then we showed the FAQ, they said it is not issued by my department, it is by central government only. This is state government. So we had a lot of issues. We are still arguing one case in one department. That office is very clear. FAQ issued by central government. It is not binding on me. So I will not consider this. So whatever, we will dispute going forward. Now what happened, the amendment. There is a significant amendment happened in this particular thing. Motor vehicles, what is meant by blocked credit? First let's understand what is blocked credit.
When you cannot take the input at all.
At all. See, I will make it this way, sir. First is 16.1 and 16.2 of the CGST Act. If you are satisfying, you are eligible. Now, because of there is a separate provision under 17.5, it is blocking you from taking the credit. Motor vehicle, you are eligible. All sections under 16.1 and 2 are satisfying. But because of the separate provision, they are blocking it. So there is a difference between eligible credit, that means ineligible credit, and blocked credit. If conditions under 16.1 and 16.2 are not satisfied, it is an ineligible credit. If the item is falling into 17.5, it is a blocked credit. There is a huge difference between these two. Now, blocked credit, they clearly told first one, motor vehicles. They said, motor vehicles, any input tax credit in respect of motor vehicles, I will not give you. First sentence. I am talking about pre-GST, pre-amendment. Before 1st February 2019, this was the situation. Then they went on and then said that no, if you are using it for transportation, I will give you. Transportation of passengers, I will give you. If you are using the vehicle for transportation of goods, I will give you. And if you are using it for any training purposes, Maruti training center and all like that, no, driving schools, then I will give you credit. This was the initial situation. There is an amendment came in 1st February 2019, and then they said, no, because people went on like anything. See, especially when the client comes and asks some questions, even I didn't have an answer. One client came to me and said that Omnivan, you know, right? Omnivan, it is with the seating capacity only. But it was a courier company for us. Courier company was using the Omni vehicle for the purpose of transporting the packets. Packets is nothing but the courier packets. They said, I am using it for transporting goods. I will take it. But the problem was that vehicle was not designed it in such a manner to use it for the purpose of transportation of goods. It's not a lorry. It's not any transportation goods way. Then they said, I am transporting. So it was a genuine case. They said, we will take the credit. We can prove it. Because why do they need Omnivan? It's only for the transportation of goods. All this confusion came. Now, the situation is very simple. They said, motor vehicle with the seating capacity of 13 passengers, including driver, then I will not give you credit. Any general insurance, any servicing which you are doing on that vehicle, any repairs and maintenance which you are doing on that vehicle, I will not give you credit. Very clear. Now the only thing which you have to do is just get into the vehicle, count the seat numbers. I have seen in North India some places and all, they will put one chair and an extra seat also will be there. Those things will not be considered. To make it 13 or 14, they will add 2 more seats, saying that there are 2 more seats. Approved seating, I will put it that way. Now what happens is, I will give you a typical example. You know Tempo Traveler, right? Tempo Traveler is the best example to differentiate. Because Tempo Traveler comes with a 13 seating capacity and more than 13 seating capacity, Tempo Traveler. So with the 13 seating capacity not eligible, more than 13 seating capacity eligible. Very simple. Don't ask me what is the logic behind this. Law doesn't have a logic. So now it is very clear, Omnivan, blocked, right? No. Again they went on and said, if you are using it for transportation, even if it is less than 13 seating capacity, I can allow. But there is a crux in the way they worded it. They said 13 seating capacity, but are all other vehicles which are used for the purpose of transportation of goods. So Omni with the seating capacity, even if you are using for transportation, now also not eligible, because that vehicle is not designed for that purpose. Now you may be asking, no, lorry doesn't have lorry will have only 2 seating capacity. Eligible? It is designed for the purpose of transportation of goods, you are eligible. Transportation of passengers, you are eligible. So that provisions continues. And then they went on and said that if the goods is available, motor vehicle is available, insurance, servicing, repairs and all eligible. Now there was another issue which faced by the insurance companies. They get a claim. When you claim, when you have any repairs and maintenance, insurance company will get an invoice from, say for example, Kiviraj Motors. They will raise an invoice, 16,000 with the GST. They were not able to take the credit. Now the amendment has come, said that insurance company for the insured, on behalf of them, if they are paying, you can take the credit. Okay. So these are the amendments in 17.5a. Now let's move on to 17.5b. 17.5b talks about food and beverages, restaurant, all canteen services, everything will be blocked in this. Beauty treatment and all these services will be blocked in 17.5b unless otherwise they are used for the purpose of the same business. If, say for example, naturals, they are doing beauty treatment. So if they are getting some consultation from Ambika Pillai, expert beautician, she charges GST, they can take the credit because that is for the same business. Assuming that my client, which is into manufacturing, getting some beauty treatment for their employees, not eligible. Okay. Now 17.5c, this is very, very important. C and D. Works contract, invoices which you are receiving for the construction of any immovable property, you are not eligible to take the credit. Any construct, what do you mean by construction? Again they went on define what is construction. I will give you a practical example which I come across recently. We were advising one client and client said, Rajiv, you do one thing, I want to, that is I am talking about 18, 19 and 19, 20. Now up to September they wanted to clear that everything is up to date. Because the group audit for their group company, group audit is going to happen in December. They said, I don't want to take any hit on GST, you tell me anything to be reversed or something. So my office people went, so what they will do, they will give you all the input services, everything they will give you, very good company. My team had a list of blocked credit with HSL. They took a VLOOKUP. 9954 is for works contract, which got caught in that particular assessment. I mean, in our own Excel formula, it shows that yes, there is a 9954. Initial was, it's a works contract, disallow everything. Because there was a factory which was constructing in Sri Perumbattur, one warehouse, basically a warehouse for keeping the goods, they were manufacturing in Sri Perumbattur factory. So it was actually pertaining to that. So completely disallowed, almost 1 crore disallowed. But we got a doubt. No. Let's relook at the invoices, call for all the invoices. When we call for all invoices, 9954 for construction was there, works contract, and 9954 for their office located in MRC Nagar, the building maintenance was done by a third party. He also gave an invoice with the 9954. Repairs and maintenance on immovable properties also works contract, 9954 used, but is there blocked credit? So what I am going to say is, all works contracts are not blocked. Works contract used for construction of immovable property, they used very clearly, there is an explanation inserted, they said, provided that immovable property is capitalized. Repairs and maintenance, are you capitalizing? It is not even my own, it's a rented premise. So you are eligible. Warehouse in Sri Perumbattur, are you eligible? you are not eligible because it is for on use, you used it. But very interestingly, one Orissa High Court judgment has come saying that what do you mean by on use? Initially, one learned member asked me, commercial property. See, I am using it not for my own purpose. I am constructing one property, commercial property, renting it out. Is it for my own use? Orissa High Court said that it is not for own use. You are eligible to take the credit. They fought, and then Orissa High Court said 17(5)(d) is not applicable in case of commercial properties. So, warehouse, factories and all for own use only, but commercial property based on the Orissa High Court judgment, it is still you can avail the credit as long as that judgment is valid. Now 17(5)(e), composition. Obviously, assuming that the other party is composition, he will not even charge the GST. You are not eligible to take the credit. 17(5)(f), non-resident taxable person. He is not able to take the. He will not be able to take the credit. Only when he is importing some goods, on that whatever tax he is paid, he can avail the credit. So, for example, Justin Bieber, he is coming into Mumbai for conducting some program. He will be considered as a non-resident taxable person. He will be conducting some program, etc. He will go back. When he is coming, he will bring with all his equipments only, instruments. He cannot come to Mumbai and buy all the instruments. So he will bring all his instruments. So whatever tax paid can be availed, otherwise not eligible. Now section, it's personal consumption, sorry. See, any goods which are used for the personal consumption, you are not eligible for input tax credit. Now the interesting point, 17(5)(h), most talked about section. Goods lost, destroyed and gift, by you are disposing it by way of gift, no input tax credit. Now first point is, are you eligible for the credit when you are making a provision for inventory? In the books of accounts, we will make provision for inventory.
Provision.
Yes.
What provision?
Provision for inventory, sir. Non-moving goods or slow-moving stock, non-moving stock. See, my inventory is, say, for example, 100 crores.
Write off.
Not write-off.
Provision.
Provision. Write-off is different, provision is different.
For that purpose, provision is made.
Provision is made. Now, provision, the moment they made a provision for 20 crores, do I need to reverse input tax credit?
No.
Why no?
Because it's only provision.
Provision. I write it off.
Then you have to.
Yes. So, you have to look at the adjustum generis for the interpretation there. You look at the previous words, goods lost, destroyed, etc. That means the previous words are signifying for the goods actually loss of goods. Right? The goods lost only they are referring to. So that being the case, inventory provision you need not reverse credit. When you write off in your books of accounts, reversal is required. Required, sir. May I know who asked? Yeah. Fire, accident, reversal has to happen. Sir, can I complicate your example? Can I? Okay. My client lost the goods. That is what I am coming to that. That's what the question is not ending there. There was a practical issue which we handled on this. This company kept their goods in bonded warehouse in Madavaram. There was a fire broke out. They lost their goods. Actually, it's a steel, but this being a foreign company, they are very particular about their quality. They can refurbish it and then take it, but they didn't. They said, let's sell it in the open market, worth 2 crores. Sir's point, goods lost in fire. Do I need to reverse credit? All of you agree? Need to reverse credit? Credit reversal is mandatory, sir, as per 17(5). The question doesn't end there, sir. You will receive a compensation from your insurance company. Correct? In my case, what happens is, insurance has been done for the invoice value. 2 crores plus 18 lakhs GST. 2 into 18, 2 crore 36 lakh. Now the question is, do I need to pay this 18 lakh GST to the government?
Yes. Yes.
I'm not saying that 18 lakhs you should give it as a tax. I'm just insuring my goods for the invoice value. Invoice value can be anything, including GST only invoice value comes. Now the question is, because I collected invoice value, it is only compensation paid to me. Is it taxable? The question, fundamental question here came, which was not answered under the Indian present legal system. So we had to literally, because GST came only 3 years back, we didn't have a precedence on this particular thing. We had to literally depend upon some foreign laws. To be very precisely, even Malaysia also didn't have this. The case was handled only in Australian courts. There they said there is a difference between compensation and consideration. All criteria are satisfying. All criteria under section 7 of the CGST Act is satisfying. We even compared it with the Australian supply definition. Almost everything is matching. But the court has differentiated only one thing, consideration versus compensation. Court said compensation is not taxable. Consideration is taxable.
It's okay, but you are including 18% GST into it, no? Your contract says...
That is my insured value. I'll tell you what actually happened in this. Because this 18% was included in that value, see, actually the cost is only 60%. 40% is their profit margin. 18% is GST. So coverage is for the entire amount. What this company has did is, they said, I don't want any litigation. This is extra money. Let's pay it off, Rajiv, and then get out of this. They actually paid that 18%. But is it really required?
When the entire amount is compensation, what you are telling is right.
See, sir, whatever insurance company paying me is a compensation. He is not saying that I am giving you a profit separately, GST separately. It's only single amount. It can be even 1 crore, it can be even 2 crore, it can be even 5 crores.
That's okay, but the coverage says it's in plus GST.
No, it doesn't say coverage plus GST, it says invoice value. So I'm not supplying, then why should I pay GST on this? It's only compensation you pay. I can even insure my laptop for 100 crores. There's no restriction. Right? He's giving 100 crores. Because this value is only maybe 1 lakh, doesn't mean that that is a compensation which I'm receiving. So there was a dispute, but company has paid. Now my input tax credit issue. As Sir said, yeah. Correct. I'm coming to that. Now the scrap has come. Now scrap has to be invoiced because any disposal of goods will also be considered as a supply. Now this is invoiced. You have to discharge your liability, sir. You have to discharge your liability. Now that will be minimal, maybe 5% of your total value or something like that. That is a different supply altogether because Section 7 of the CGST Act says use 7 keywords which are inclusive. Say sale, transfer, barter, exchange, lease, license, rental, disposal. So disposal is there. Or you can alternatively call it as a sale also. Disposal means what? There will not be a recipient. I am just throwing it away. There is no recipient. But what do you mean by sale? Scrap sale is actually sale. So GST is applicable. Now, yes sir.
Gift given to the employees of
Yeah,
the
yes.
product manufactured by the company.
Can I complicate that issue?
First answer it, then
Can I complicate the issue? I got a wonderful issue.
as you wish.
Tell me sir. Yeah, you tell me first.
See, the gift which is given or free samples given to market
Yes.
is to be reversed.
Yes.
Suppose gift is given to an employee, like in your example, the fan manufacturing
Yes.
company gives one fan to all its employees.
Yes.
Whether input tax to be reversed?
Yes, absolutely it has to be reversed.
Because gift is not included, no.
Gift is included.
Up to 50,000 it is exempted, no.
No, that is only for the taxability. Taxation for the purpose of section 7, supply. For the purpose of reversal, 17.5 says gift input tax credit has to be reversed. Now, yes madam. I'll just, can I complicate this issue first? Okay.
Complication.
Yes. My company is into consumer manufacturing. That means they manufacture AC, fridge, washing machine. You can see their products across. That company had a subsidiary. They are mainly into support services. Say for example, now you have a washing machine problem. So what will you do? You will not call to that particular company directly. You will call to the customer care only. So customer care is a separate company which is incorporated. Now this customer care company is also part of this main company effectively, though it's a separate legal entity. Based on the performance appraisal of this company employees, the manufacturing company gave a gift, not to their employees. Be very, very careful. They gave it to a subsidiary company's employee. Subsidiary company is a related party as per section, explanation to section 15. But subsidiary company's employee is not by related person as per explanation to section 15. Now what to do?
Pay tax.
Pay tax. Now what actually happened in this is, the gift paid by this manufacturing company, what they told is, you pay, give it to him, buy the product, give it to him, you get it reimbursed from me. Now again complicated. He said, that company said, I'll do one thing, I will get the goods, I'll get the gift.
Which company, sir?
Other
Company,
person.
which company?
No, that is a, see.
Manufacturing company.
Oh, okay.
Subsidiary company.
Okay, fine. That's a good question. I thought you were asking the company name.
That's why the silence.
Because tomorrow, these are all recorded video, department will directly go there and the impact will be huge. So, as sir said, they will change the auditor. I am not the auditor of the company, I am only advisor of the company, but still. So, what will happen is, the manufacturing company told this customer care support company, you buy it, give it to him, and you get it reimbursed from him. First point is it a supply reimbursement? Pure reimbursement. That is will be dealt in levy. I am not moving into it. My point is input tax credit. This company is buying, is he eligible to take the credit? The commercial, that means the customer care support entity, will they be able to take the credit?
Yes.
Yes,
They can.
they can take the credit. How?
Because they are selling.
It is not, sorry sir? Used for his business.
Business only.
No, not for his business.
No, he is selling to his employees, right?
He is not selling, he is gifting it. But actually, it's only reimbursement, actually gifted by that company only. I am not gifting to him.
Cross invoice will be there.
There is another invoice also which has come. They are asking me whether that is a supply. That is a different issue, I am not discussing because time is over. But reversal of input tax credit is mandatory. Okay. Now last one is 129, tax paid under or penalty paid. Tax paid we already discussed under 36, right? Now penalty paid under 74, 129, 130. 129, 130 same only. 129 is nothing but detention of goods. They can detain up to 14 days. Once you don't release the goods within 14 days, 15th day it will become a seizure. Then the ownership transfers. Detention and seizure, what is the difference? Detention means ownership is with me only. Seized means ownership has gone to him. So whatever the case, tax paid under that particular thing, not allowable. Okay, now the major part is over. I think now we are coming to some small climax. Now we will have some small issues. Now I wanted to tell you a couple of other issues with respect to discount related. I will just discuss that anyway. I will just take a little more time. Is that want to be discussed? It's a real case again. Company proposed a promotional activity. You buy my product for 3 consecutive months to the extent of 10,000 per month. I will give you free supplies worth of 10,000 in the 4th month. First applicability is 4th month supply is a free supply. Okay. First, is it a supply taxable under Schedule 1? I am not getting into it. Again, I am telling you, one issue will have multiple connections under, maybe connecting all sections of GST, but because of my hands are tied, I have limited time, I am taking only input tax credit aspect. Excuse me. So, in this particular scenario, free supplies, can I take the input tax credit? Free supplies, not free samples. Free sample is different, free supplies are different. We are all interpretation experts, no? All CAs are interpretation experts, even advocates for that matter. Free supplies is different, free sample is different. What is the difference between free supplies and free sample? Free sample is meant for samples. Say for example, medical medicines, which is written that saying that it is for sample, not for sale. That is a sample. Medicine with MRP which is sold across the counter for no consideration is a free supplies.
Vilayilla Madikani.
Whatever.
Tamil Nadu
So,
is very famous. Priceless product.
there are two aspects, free supplies and free samples. Free samples, reversal is required. Free supplies, reversal is not required. Understood what I said? So even if there is no consideration, it cannot be considered as a free supplies. I am using the word very carefully. Gift is different, free supply is different. Gift is different, free supply is different. Gift is voluntarily you are giving. Free supply satisfy all the criteria under section 7 of the CGST Act. So gift, free supplies, and the last one is free samples. You have to understand these three keywords. I am just putting the seed, you can process it over a period of time. You yourself will come up with the bigger examples. So I am just, so this discount actually came for an opinion. They wanted to know whether there is any GST liability. When we started analyzing, we got around 8 alternative options to prevent GST payment. That, anyway, if I get another opportunity, probably I can share it in the next forum, because now it's 12:58, so I have to move and then close it. So section 18(1), what is it talking about? Once you become compulsorily liable to get it registered, nothing but if your turnover crosses 20 lakhs, now for supply of goods, it is 40 lakhs in many states and 10 lakh in special states. Now there's some states increased to 20 lakhs. And the main states who did not adopt for this particular provision is Kerala state and Telangana state. They still continue their old limit of 20 lakhs and 20 lakhs. Now if they become liable, if I become liable to get it registered, what I can do is only the stock lying in my warehouse, stock lying with me, on that whatever tax paid, I can take the credit. But just assume that, to what extent? Till 1 year, 1 year before, till 1 year I can take the credit, not before that. So my problem is, 1 year before, now only I am getting it registered. 1 year before, if I go to my vendor and say that vendor, now I am registered, I am eligible as per 18(1) to take the credit, you just change your 2A, GST 1, you change it and nobody will do it. That's why government said, no problem. You calculate that number and take it only for capital, in stock, and file ITC 01. ITC 01 is a simple form. Whatever number you put it, automatically it will come into the other party's ledger if he accepts it. So this is, in this case, there is no two party, he himself files it. So no problem, but the eligibility you have to check, that's all. The same case for voluntary registration. Even if my turnover is not more than 20 lakhs or 40 lakhs as the case may be, and this 40 lakhs is only for goods, okay, not for services. Just be careful. And voluntary registration and only stock and compulsory levy cases, that is section 10, composition levy become normal levy, or section 11, exempted supply become normal levy. These two cases you can take whatever the stock and capital goods lying in your, lying with you as on that particular date, which you can take it by filing ITC 01. Only criteria is capital goods, you cannot take the full credit, there is a computation accordingly. Okay. Just keep it in mind that the capital goods calculation, not the exact value whatever you purchased, there is some reduction which will happen. Now, I said in these cases, the last date for availing credit is, 1 year before only you can avail the credit. Now, change in constitution, this example I already, discussed with you, that merger case, right? See, these are all rare cases which will happen exactly at the verge of this GST regime. We got this case. That is what we were able to explain this particular thing in detail. So this I already explained, ITC 02 filing. I said ITC 02 we filed 2 times, that is also eligible. Don't ask me the client name. Notice will go to the client, that is what I said. It's a huge amount. Now, we will move on to the last 3 small topics. Job work, to ISD, and third is banking financial institutions and all. Okay. So job work, what happens is, job work is a very hot topic right now. And what is the criteria in this? As I said in the few minutes back, that pharma company job work case, what happens? I will give the material to them. They will do a treatment or process and they will send it back to me. Ownership is still with me. Ownership is still with me. In that case, the job worker will be charging only his service charges. What do you mean by job work? Job work has been defined under 2 subsection 68 of the GST Act, saying that job work means any treatment or process on others' goods. Treatment or process on another registered person. Because that word is now important. Because the rate schedule which has now come, they said, job work we reduce the rate to 12%. But you go to 268, job work means it's only for the registered person. So if the job worker is doing job work for an unregistered person, it's not a job work. So 18% will still continue. You understand what I'm saying? So job work is nothing but doing a treatment or process on others' goods. So in this particular scenario, I will get the goods, I'll do a treatment process, I'll send it back. He's a registered person, 12%. If he's unregistered person, it is not even coming to job work definition. They said applicable rate is 18%. What is job work? I will send the goods to them, they will do the treatment process and then will send it back to me, or they will send it to other parties' place, wherever I wanted to. Now what happens is, when I send the goods to a job worker, I may get it immediately. Some cases like dies, jigs, fixtures, tools, etc. I will not be getting it immediately. I will not getting it immediately. So they said, for inputs I will give you 1 year time. For inputs I will give you 1 year time. For capital goods I will give you 3 years time. And commissioner can extend this time. So assuming that I am sending some goods now, so in that fan manufacturing case also, they were getting some job work done from other party. Those things will come back immediately. Those things come back immediately. Some cases, job work, it will take more time. So the time limit which is given under GST Act is 6 months. 1 year. And for the inputs, for capital goods, it's a 3 years. Now the question comes, this dies, jigs and all, there is no time limit. I'll give you another practical example. This company is a shoe manufacturing company. You know shoe manufacturing company, right? Shoe manufacturing company, what this company will do, they are doing the mold manufacturing. See, mold has to be so precise, the kind of shoe which you are wearing, that is based on the mold or dye which they manufacture. So it should be 100% precise. And they will do a lot of checking, computer settings, blah blah. So this is a good example where they will give this dies to the job worker who actually does the shoe manufacturing. So they will keep this dies with them for a long time. As long as that product has a market, that shoe has a market, they will use it continuously. So as long as that is there in their place, no need to reverse the credit. But if you are not getting the goods within 1 year, then that will be considered as a deemed supply. Now ITC 04, there was a form which needs to be filed from 1st of July till now, but very unfortunately that is a very complicated form. Government said that nobody needs to file that for financial year 17-18, 18-19. Now first point is, when I was discussing the ITC, I said goods must be received. So one of my clients' case, what happens is, they were located in Chennai. They got some goods in from Delhi. They sent it to Karnataka for job work. So goods are received in Karnataka. But actually after processing, I received it after 6 months. So there was a deemed receipt, deeming fiction under section 16, saying that even if the goods are received by the job worker on behalf of the principal, you can consider it as a deemed receipt. Point number 1. Point number 2, such scenario happens in bill to ship to scenario also. Scenario 3, that happens in import of goods also. Import of goods, one client's case, what happens is, they are located in Tamil Nadu, goods have come to Bombay port. Client is located in Gujarat. Now the goods should actually physically come to Chennai and go to Gujarat. Not physically possible. So they said in these three scenarios, I will consider it is a deemed receipt. You can avail the credit. So job worker, for availing the credit, you need not, as a principal supplier, you need not receive the goods in your factory, but even if it is received by the job worker, you can avail the credit. Now let's move on to ISD. ISD we have already discussed. You will receive the invoice, then you can distribute the credit by way of even CGST, SGST to other states. You can take the credit. In my morning example, I forgot to mention one more point. The Taj issue. See, one important point somebody asked me during the session only, at that time only I remembered. As long as that service is pertaining to Tamil Nadu, you can avail it. Tamil Nadu, there is no restriction. Tamil Nadu, the restriction is only based on, not on place of supply, but on 2 subsection 17 of the CGST Act based on business. So assuming that the turnover of Tamil Nadu is 80%, they can take the 80% value of that Taj invoice. Assuming that their turnover is only 10%, they can take only 10% of the CGST, SGST invoice which is raised by the Taj for the All India meet happened in Tamil Nadu. Now, the funny thing in ISD is, if there is a recoverability, if the distributor ISD did a mistake in Tamil Nadu, say for example there are 18 states, Tamil Nadu is having the ISD office, if ISD is wrongly distributing, actual recovery will happen with the recipient. ISD is not responsible, because ISD is merely a mechanism that cannot be prosecuted. So, that is another thing. Banking industry, very simple, very complicated. Banking industry, they said input tax credit, I will give you only 50%. I give you 2 options. One is you properly avail it. Second is I will give you 50% of the eligible credit, you directly take it. Eligible credit means after removing all 17.5 credits and all. Then also they went on further and said that if there is a branch cross-charge invoices, you can take full credit. I'll give you one important point in this regard. Say for example, most of the Tamil Nadu bank branches, their foreign exchange team will be located in Mumbai. So if I wanted to do some transaction, they will in turn ask Mumbai branch to do that. So actually there is a supply of service which is happening between Chennai branch and Mumbai branch. So whatever the invoice which they are raising, full input tax credit can be taken. Only on outside parties, only 50% can be taken. That is an option which is given considering the complicated structure of the industry. Now, one more point with respect to this 20% restriction. I don't know, I just missed it out. The 20% restriction is applicable. That should exclude import of goods, import of service, that is import of goods, RCM and your ISD invoices. So when we discussed in morning 36.4, you have to literally remove import of goods because it will not come into your GST 2A. ISD credit, you remove it because it's only ISD credit. Then they said RCM. These 3 things you need not even consider, you can take 100%. Okay, that is the only point which I would like to add. Now, I wanted to understand. I am done with my presentation, almost. If you have any doubts, I can take more case studies, but I think my time is up. I think we started at 10:15. I finished at 1:10. I have 5 more minutes for Q&A. And if the organizers or you would like to continue, I don't have any problem, but it's up to you. The floor is yours. Now you can ask any questions. Please restrict your question to ITC. Reason being, not because that I may not be able to answer, I can take it offline. It's probably a next speaker's topic, I don't want to get involved in it. Because mainly what happens is, it's a scenario which I have seen is, people will ask me one doubt, the same doubt will be asked to 5 people, 5 speakers, till he gets the answer which he wants. till the answer which he wants, he will keep on asking. So my job is done. So if you have any queries, please shoot up. Yeah, please, madam.
Actually, my client is pharmaceutical company.
Pharmaceutical.
Yeah.
Yes.
They are selling medicines.
Yes.
They are giving, you take cough
Yeah.
They are telling, selling 10 cough syrup to medical rep.
Yeah.
And they are going to the doctors and giving it. And as a sample they are giving, then later on they are writing and what should be done for that credit, saying no, not credit.
Yeah, very good question. Yeah.
What to be done?
See, her question is, I will give you more inputs on the pharma industry, madam, which can be extrapolated to another industry also. Her question is very simple. Her company is into the pharmaceutical industry, where they are giving samples to the doctors. As per the pharmaceutical, the general practice, and I think it is a law also, that when you are giving free samples, you have to clearly mention that it is samples for free. It's not for sale. This will be given to the doctors. Even doctors, even my uncle is a doctor, he's an orthopedic, so he used to give me some painkiller medicines and all, which on that it would be clearly mentioned, it is a sample. But he will say that no, everything is same only, you take it. So, that sample comes under 17.5 madam. 17.5H, you have to definitely reverse the input tax credit. Since she talked about this pharmaceutical industry, let me take one more example. One circular has come. Now, in your industry, what happens is, I will be supplying the medicines. Medicines will get expired. Now I have to take the goods back. Maybe 1 year, 6 months, maybe 3 years would be the life of the medicine. So there are in the pharma industry, generally what they do is, if you return it before 6 months of the expiry, one rate. If you are, returning after expiry date, the credit would be less. I mean, credit in the sense the money which you can recover would be less. So there are different practices. Now the point is not that. When they are returning, how do you treat it? So there are two options which are given by the circular on this industry, saying that if it is an expired goods, you either as a supplier raise a credit note and take the goods back. What do you mean by credit note? Credit note, they are referring to financial credit note. Because whether the credit note can be raised under section 34, that eligibility also to be seen. Because there is a time limit for raising a credit note under GST. If that is not satisfied, you have to raise a financial credit note which need not be disclosed anywhere in the GST return. Alternatively, they said, as a pharmaceutical, maybe pharmacy or whatever it may be, distributor, you can raise an invoice for a supply. You can consider it as a supply. Instead of credit note, you consider invoice it as a supply and do that. So when you do so the transaction doesn't end there. When I invoice to him, he has to destroy it, because expired goods, what will you do? You have to, destroy it. When you are destroying, 17.5H will come. Reversal is mandatory. If he is raising a credit note, reversal is required. Both the cases, reversal is required. Now, you may be thinking that that's only pharmaceutical industry. No. Why should I get discussed, or why should I concentrate on this example? But let's look at the notification. Even if it is applicable to pharmaceutical, in the bottom they said this concept can be applied across the industry. I will give you a typical example. My client is into fast FMCG goods, where this client supplies chicken. Even I didn't know the story behind all these things. Chicken has an expiry life of 3 days. Chicken has an expiry. I also got astonished by getting these facts. They will supply to say Reliance or more market. They will supply chicken, and the chicken, once they reach there, the life of the chicken is 3 days. 3rd day they should return it. And when they are returning it, this provision, this circular will be applicable. You take any food item for that matter. You extrapolate to paneer, which is supplied, food product, expiry date, almond milk products, whatever product which you see it in the market, in the supermarkets. Same credit note concept will be applicable. Reversal of input tax credit also will be applicable. You look at this concept further, you can see the inside story of this case also. You know what happens to the chicken which is taken back? See, they will sell it at say 100 rupees kilo chicken. After third day, why you are returning? It's actually expiring, right? It's actually expiring as per whatever the rules. You know what happens to the chicken? Whatever the expired chicken, they are selling it in the market on a lump sum basis. Maybe 50 rupees per kg or 30 rupees per kg. Actually speaking, to be very precise, it's 30 rupees per kg. That chicken only probably come to hotels and all. I'm not getting into that, but whatever. I'm just giving you.
Comes back to hotel.
Hotel, I don't know. I don't want to comment, but still, I know where it goes. But still, I don't want to comment on that. But just take care of this expired goods. What is our topic? That notification, the circular, you extrapolate to all expired goods. Probably now when you look at your clients, you will be getting these examples. Refer to that notification circular number. I mentioned in my PPT also that circular number. If you have any doubt also, you can get in touch with me. Yeah, please. See, actually, that they are purchasing it at 100. The transactions, I will actually explain the full transaction if you want. You are the supplier, I am buying it from you, and if the expired goods I am not returning to you. Actually the goods are returned to sir for 30 rupees. Okay, and you will be giving me 70 rupees compensation to me as a credit note. So I just simplified that example. Actually transactions like this, you will be giving to me for 100. Because of expiry, I will sell it to 30. You will be giving me 70. So there is a valuation issue also. Sale value paid by a third party also will be considered as a sale for the purpose of 15. This is not the sole consideration, that is also there. Now credit note, all those are complicated. I took only my part of ITC. That's all. Yes, next step. This side, yeah, please. Appreciate your questions. Yes, sir. Yes, very good question. Interior decorations or renovation which is happening in your office, will it be blocked credit? Interior works and most of the repairs and maintenance will come under works contract because they do both service and then goods. As long as you capitalize that works contract invoice as repairs and maintenance or interior, office interior, you are not eligible. Assuming that you charge it off to P&L account, you are eligible. But income tax will come and catch you. They will say that it is not revenue item, it is a capital item. So my point is, my answer is very simple. As long as works contract invoices are capitalized in your books of accounts as asset, no input tax credit is available. 9954. Yeah. You can avail it. Very well, you can avail it as per GST law. Income tax you handle. Yeah. Any question from this side? Not even a single question. Please. You can ask anything. Yeah, please, sir. Yes. Yes. Okay. Yeah. Report not, interest is not? Why input is not reversible? Okay. I will just go a little deeper into it. I will tell you one scenario. Can I take one example? See what? He is asking one important question which everybody will come across. 180 days more than outstanding. Reversal is mandatory. No doubt. We have already seen 16 subsection 2 second proviso. We have seen reversal is mandatory. We have already seen the rules also. Rule 37. Everything is perfect. Sir's point is, I found the issue. Told to the client also. Client is not reversing. Client is saying that I will pay interest only. I will not reverse it. Yeah. No, see, actually speaking, reversal is required, sir. Reversal is required, there is no doubt. But you look at one more angle which I come across. You said talk about interest. What do you mean by interest? Sir, this is very litigative. It's only within this four corners of the building. I am taking a view. I am disclaiming that highly litigative. What do you mean by interest?
Extra compensation paid for the delay in servicing of dues.
Correct. Supreme Court in some cases, said that interest is compensatory nature. Penalty is penal in nature. What do you mean by compensation? Compensatory means I have to pay you 10 rupee. I have paid it delayed. I have to pay you interest. In your case, to protect your legs, you just see, assuming that the reversal is pertaining to, say for example, pertaining to March 2018. Just see whether the accumulated credit is there or not. Then, highly litigative, I am just disclaiming, I have not tested it. I just went in deep and then got an alternative view in case of 90% losing case and then 10%. So at that time you can see there is a ITC available. So even if I am adding it to my liability, I would have utilized that credit. So there is no revenue loss to the government. Revenue loss to the government. Then where is the concept of interest? So even what I am saying is, in that case even I will challenge the interest also. See, when you are advising, you take a conservative view. When you are litigating, take an aggressive view. The view which I given is a litigative view. I am taking very aggressively. But if it is my client, I will say that, sir, please pay it off and then declare it. It's anyway, the form has changed with the true and fair view. Yes, sir.
Can we take credit on GPA and GSI?
Sorry?
Health insurance, whatever we
Very good question. See, 17(5)(b) says health insurance and medical insurance. Not all insurance. I will give plenty of example. Personal, professional indemnity insurance. Credit is available. Yesterday only I got a query saying that they are going to take 8 lakhs. Professional indemnity insurance, you take the credit. Group accident policy, take the credit. Anything other than life insurance and general health insurance, life and health, take it.
life and health alone are
Only life and health.
Vehicle.
Vehicle is coming under 17(5)(a), sir, where if your vehicle is having more than 13 passengers, obviously, that has a different fight altogether. You can tell time actually. I'm done with my presentation. I'm taking only Q&A. Okay,
You have told that for bank and financial institution we have option to take 50.
Yes.
What is the other option?
Other option is normal payment.
Normal payment means entire 100%.
Entire 100% is subject to reconciliation, subject to the normal conditions. Whatever applicable to normal private limited company will be applicable to them.
And what is the benefit the SSE is getting when they take?
See, what happens is most of their supply is exempted. Interest is exempted based on notification 12/2017 dated 28 June 2017. Interest is an exempted supply. So when interest is an exempted supply, they will also get some interest. So they will have a lot of interest exempted supply. They will have a lot of complicated structure because they will be having a lot of branches. They will be doing multiple services. So government said that I don't want to complicate. Easy way is to give you 50%. I will not ask you anything further.
Because of the major component of
Interest income and other things. Bank interest income is also there. Their main is interest payment only their main thing, but they will also have interest income both because they are into lending. Yeah. Any other doubts? Yes. Exhausted with the doubts or?
Sir,
Yes, sir.
can you logically tell us?
No logic applicable, sir. Lord, no logic applicable.
Possible. Please take the question first. What is the logic in asking the assessee to reverse if the payment is not made more than 180 days? I just wanted to know.
See, government says that I raised an invoice to you. And I paid the tax. You did not pay the tax and invoice to that party. So you are not eligible because you did not pay the tax effectively to me. Me means nothing but government. Me means what? I am collecting on behalf of government. So you effectively did not give, so I will not give you credit. That is the logic.
People are filing their monthly returns and
I am filing and I am paying, sir. I am paying. So government is not a clause, but government wants to ensure that you have not paid. You are the beneficiary. I am paying out of my pocket, right? So he is saying that 180 days is, if it is more than that, reverse it. Better no audit fee. Many times, many for office, this will be outstanding for a long time. Now you can at least say that section 16.2 will be there. You have to pay within 180 days. Now as Sir said, they will say that I will not pay, I will even pay interest, but I will not reverse it.
opening the room for termination of auditors.
Correct. Any other point? Yes.
180 days bank debit date or
Yes.
in our books it will be accounted on 31st March, but it is cleared only on 29th June.
No. For the 180 days period, I gave you multiple dates. Date of issue of invoice, date of receipt of invoice, date of booking of invoice, date of availment of invoice, credit and utilization of date of utilization. There are 4-5 dates I gave you. For the reversal of 180, date of invoice is important, relevant. For payment of interest, the moment reversal happens, date of availment of credit, the date on which you took it into 3B and pay interest under 50 subsection 1.
That's what date of invoice is supposed 1st October. And
Yes.
I show in my book that I paid on 30th March itself, but it actually got debited on 20th June.
How can that happen? I didn't get you.
The person keeps his check with him, he doesn't deposit for 3 months.
That.
So at the end of the 3rd month, he deposits the check.
Okay.
Actually,
It is very, very complicated. Yeah.
At the end of the June. It's happening with me.
Correct.
The client doesn't give the check to me. He says that still 3 months are there. I'll pass it back.
This is more funny example. It's actually paid, but not paid. In their books it is paid, check is with them, it is reconciliation, check is lying with them.
Get your signature that I received the check on
Check issued but
3
not
months back
presented
itself.
for
Check issue but not presented. So your client also will be started doing this. On 188th day, they will issue a check. Another 3 months they will get, correct? No, it should be paid actually to the bank account. So you cannot simply issue the check and then utilize it. It's a good idea. Don't tell it in the open forum, clients will start using it. Any other points? Doubts? Done with it? Thank you so yeah. Please sir. It is possible, sir. See, what is mean by payment? Payment can be, consideration can be either in the form of money or other than money. In kind also it is possible. So, even if you are setting it off, no problem. Even one circular has come for export of service. When you are receiving service, consideration foreign currency, you have to receive it in foreign currency. Say for example, I am raising an invoice for $2,000. I will have some expenses which is incurred abroad for transportation. So, say for example, my courier company, I am sending it to US port. From US port, that packet has to be taken and delivered to the customer. So, their transportation cost will be there. So, I don't have a transportation there. So, what I will do as a company, I will say that transportation company, please pick it up and then drop it. So, now the circular is saying that whatever amount payable to that foreign company, you can ask your customer to pay. So, say for example, transportation cost is $1,000. So, he can pay $1,000 to him and realize only 1,000. Still, it will be considered as an export of service. There was a circular issue, and based on that only I am saying we are using it for one of our courier company. Yes, done. Thank you so much. Thank you so much for being wonderful audience. I thank you for the institute also. Thank you.
Thank you, Rajiv sir. That was an elaborate and lucid presentation as usual. I may now request Saranand sir to present a memento on behalf of SAS.
We are close.
Very good afternoon and welcome back to the post-lunch session. May I now request Ganesh Prabhu sir to occupy the dais. Sir will take us through provisions relating to place of supply and changes in GST audit as per notification number 556 for 2019 CT. CA Ganesh Prabhu Balakumar is a Chennai-based chartered accountant in practice. He holds a commerce diploma graduation. He is a commerce graduate, master in financial management from Pondicherry University, chartered accountant from Institute of Chartered Accountants of India, Bachelor of Law from Karnataka State Law University. He also holds Information System Audit from ICAI. He also did a certificate course on indirect taxes from ICAI. Presently, he is a partner in a leading firm at Chennai. As a partner specializing in indirect taxes for more than a decade and heading the GST and indirect taxation, compliance, advisory and litigation vertical practice. He was involved in GST implementation of various organizations and advised clients across verticals such as manufacturing, construction, entertainment, real estate, retail trade, automobile, educational institution, charitable and religious institutions, hospitality industry, etc. As a faculty member, he has extensively toured to several parts of South India to give guest lectures to members, financial professionals and students in GST. He is a member of GST study group of ICAI and contributed in development of background material on GST law and handbook on annual return and technical guide on GST audit developed by GST and Indirect Taxes Committee of ICAI. He has presented papers in various forums, including National Academy of Customs, Indirect Taxes and Narcotics, SIRC of ICAI, Society of Auditors, etc. He is a resource person in ICT Academy, an initiative of Government of India and other states. He is also a visiting faculty in Loyola Institute of Business Administration. He is a member, governing council, and was the immediate vice president of International Chamber of Indirect Tax Professionals, an association dedicated exclusively on indirect tax. He regularly writes articles in reputed financial dailies and magazines and participated in various shows and debates in television. During his school days, he has won first place in All India 5th Quiz competition for an ICA student conducted by ICAI. With this brief, I present before you Ganesh Prabhu sir. Please give him a warm welcome. Over to the speaker.
Very good afternoon to one and all present here. Good afternoon. Afternoon session has various challenges. With that, a very new challenge of few amendments that have been brought under the GST audit, annual return. Of course, a very welcoming amendment, and major difficulty areas have been addressed. However, whether it is beneficial or not, during the course of our presentation on that aspect, yes, we would consider. Before getting into changes that are very recently made on GST audit, we'll make our initial discussion on a topic called as place of supply. This law is very successfully implemented. After being implemented, 2.5 years is comfortably over. Still today, we have issues in place of supply. Is place of supply is such a difficult topic, or do we have challenges still on place of supply? Are some of the questions that are all still lingering? Probably I can only share. I would not take much of your time, just 4 sections to discuss. Section 10, Section 11, Section 12, Section 13 of IGST Act. In fact, IGST Act has a broader weightage only on this perspective, to determine whether a transaction is an intrastate supply or interstate supply, which will be the duty of Section 7, 8 and 9 of IGST Act. And one of the characteristics or one of the attribute to determine the intra or interstate supply was place of supply. That is discussed in Section 10, 11, 12 and 13. Just this 4 sections. Coming back here. Why someone need to know about place of supply? I'll start here. All of us are already aware, I do agree. Whether my transaction is an intrastate supply or interstate supply is the key element. To put it in a different way, for me, whether Section 9 of CGST and SGST Act is applicable, or for my transaction, whether Section 7 of IGST Act, 5 of IGST Act is applicable, need to be determined. To determine that, reading some provisions of IGST, more specifically 7, 8, 9, nature of supply, one can conclude a transaction is an intrastate supply or interstate supply. All along examples for us would have been given. There is a supplier in Tamil Nadu, he supplied goods to a recipient in Andhra Pradesh. Transaction is a intrastate supply or interstate supply. Yes, very comfortable answer. Yes, intrastate supply, interstate supply. Supplier is located in Tamil Nadu, recipient is located in Andhra Pradesh. Intrastate supply, interstate supply. Inter. Afternoon session. Let's be very clear. Yes. Intra. Great. Now this is where the twist in my story, that the goods are delivered at his factory gate in Tamil Nadu. The ownership, possession, control, it was a sale as ex-factory. Now my place of supply is Tamil Nadu. When my place of supply is Tamil Nadu, my decision making will be based on reading with nature of supply. Let me repeat, a nature of supply topic which is discussed in section 7, 8 and 9. Location of supplier and place of supply. If it is going to be in the same state, then the transaction is intrastate supply. Location of supplier and place of supply is going to be between two different states, then the transaction becomes interstate supply. All that I want to make a submission here is location of supplier and location of recipient is not relevant. Location of supplier and place of supply are the relevant information to discuss in it. To determine place of supply for each transactions of goods and services, we have a section called as place of supply, which has been placed in 4 different sections: 10, 11, 12, 13. 10 and 11 for goods, 12 and 13 for services, 10 and 12 for domestic transaction, 11 and 13 for international transactions. So someone could break down this topic as place of supply 2 ways: place of supply for goods, place of supply for services. Goods, again 2 sections: 10 for domestic transaction, 11 for international transaction. On the other end, 12 for domestic transaction, place of supply for services, and 13 for international transaction. Why I need to discuss this topic? We will think this supply is intrastate supply. Unfortunately, because of some wording or because of some provisions of section 12, 13 or 10 or 11 as the case may be, the position will change. Preferably from a goods perspective, our answers will generally be right. Let me repeat, generally be right. From a service perspective, answer, there are possibilities to go wrong or high. In my view, only this aspect. If you're going to ask me, even today, problems are still existing on place of supply. In my very humble view, after doing a few GST audits, I would definitely say, yes, there are place of supply issues. That too, the place of supply issues need to be appreciated by the organization, which is different from a forward charge basis and reverse charge basis. So these are all the background for it. And to start with a very simple section, place of supply for goods. 5 different elements. Section 10 will get breakdown into 5 different ways. 10.1 ABC, then followed by 10.2, 10th. Coming back here, with reference towards section 10 is concerned, where they come out and say, whenever goods involves movement, place of supply will be the destination of the goods or the place where the movement terminates. And very interesting to notice that movement can be occasioned either by the supplier or by the recipient or by any other person, but that movement where the movement terminates for delivery. My movement should terminate for delivery. If my delivery is going to happen at this location itself, then my place of supply will be Tamil Nadu. When my delivery is going to happen at Andhra Pradesh, then my place of supply will be Andhra Pradesh. Let me repeat it, the place where the movement terminates for delivery. So the word for delivery gains its importance. It is not of delivery, for delivery. So points to be noted down over here is, in case of all those goods, 90% of the goods transaction will involve movement. In case of movement, the place where the movement terminates for delivery becomes place of supply. Ex-factory transactions are going to be litigated left, right, center in this country, where a SGST officer would say, you are handing over the goods at my factory gate, at your factory gate, so the place of supply would be Tamil Nadu. To the contrary, a recipient who comes all the way from other state and buy the goods, and as part of the contract he accepts the delivery at his factory gate and transport through a carrier or a transporter to the other state. Now, will he be entitled to input tax credit? All others are going to be on big questions. Point that I want to drive home here is, now also again this point will get further litigated. Is it the actual delivery of goods is going to be an important factor, or it is going to be a tentative delivery? It is actual delivery, or it is something to do with physical delivery of goods, or it is going to be the place where it is intended to be delivered? That is going to be more important. These are all topics that will get litigated in this area for coming years together. But my point over here is, for delivery, actual delivery, physical delivery. In case of physical delivery, the place where it is delivered, that would be place of supply. Moving forward from here, the second subsection would come out and say, in case of all those bill to ship to transaction, where people act as an intermediary, where people act as an agent, where people act as a middleman in case of buying and selling of goods, where they also transact the transaction through them. In all those cases, this concept called as bill to ship to will happen. In case of bill to ship to, where there will be a supplier, there will be a recipient, there will also be a third person. There will be three people, A, B, C. A is the supplier, will supply goods from Maharashtra. B is the recipient who is going to buy the goods, but B buys on behalf or to further sell to C. Instead of delivering the goods at B's location and further supplying to C location, he gives a clear instruction to supplier A, deliver the goods at C's location, give the bill to B location. Now in this situation, the place where the goods are going to be billed, or to put it in a different way, the location of the place of supply of such person who gives instruction, that would be the place of supply. So in a bill to ship to transaction, for me, movement is not required. Let me repeat, where goods moves is not relevant. For me, where the third person is located is most important. The person who is going to give me instruction to supply goods. On his instruction, I go and deliver the goods. Or to put it in a different way, he is only going to make payment, but he is not going to enjoy the goods, or he is not going to deliver the goods. The goods are delivered to somebody else. In these circumstances, yes, place of supply will be there. Again a doubt will come. Supplier is in Maharashtra. He supply goods to a person or a recipient, or to a person located in Andhra Pradesh. However, the instruction to supply goods comes from another recipient in Maharashtra. Supplier Maharashtra, recipient Maharashtra, delivery of goods is going to happen at Andhra Pradesh. Now this is what is the situation that we are exposed to. As simple as that, when we place orders with Amazon, where we will ask billing address one location, delivery address another location. Interesting to note, in both the location, one is our office address, one is our residential address. Same situation with little more business and commercial needs associated with it. I am talking of business address 1 of person 1, business address 2 of person 2. That is what is bill to ship to. In this case, my place of supply is not the place where the movement terminates, which is a general entry. My place of supply is the place where I am going to bill the goods. Place of supply will be Maharashtra, location of supplier Maharashtra, place of supply Maharashtra. Transaction is a intra-state supply. But someone, when they prima facie look at it, the goods will move from Maharashtra to Andhra Pradesh. These are all some small aspects associated with it. But points to be noted is, in case of these transactions, my destination of goods is not relevant. Yes, the person to whom I am going to bill to collect all these money, that is more relevant. Why these topics are getting important? Instead of intrastate supply, I paid interstate supply. Instead of interstate supply, I paid intrastate supply. So what? Nothing would happen. Correct? Actually nothing would happen. But unfortunately we have section 77 which comes out and says, if a person has paid a tax for an intrastate supply as interstate supply, or under IGST Act section 19 for an interstate supply as intrastate supply, they will once again pay tax and claim refund. I think keeping this in mind and keeping GST audit that is going to be there, this topic will gain all its importance. Why? This is the reason why. So one, if it is an intrastate supply transaction, then I have to pay only IGST. If it is intrastate supply transaction, then yes, CGST, SGST need to be paid. This is on the first two small items of goods. Moving forward, third line item, where goods does not involve movement. An extreme situation, a little rare situation where a supply of goods happens, ownership, possession, control, title, everything is getting passed, but the good does not move. Little rare, little rare. If in case where there is no movement of goods involved, but there is a supply of goods, then the place where the goods are located or the goods are stationed, that would be the place of supply. This situation is little rare, except for circumstances where certain unique transactions that are being there, someone imports the goods, has it in a particular location, and for various logistic reasons they are not bringing back to their original location where they are doing business. They want to push the goods to another location. Exceptional transactions, yes, may be used, but generally on a commercial sense, rarely this transaction is used. Without movement, a supply of goods. A company had its operations in one location. After few months or few years, they have closed those operations. Still they have some stock in their own godown. Now they close their registration, disposed of or deemed as supply, it has been their final return is filed all over. Still they have those stock. Now one fine day they identified a buyer to sell everything on a holistic way. Yes. Lump sum money is being collected for whatever stock he has or whatever variety he has. Maybe their entire stock is taken. Very interesting to note, with the stock, same godown I will take on rent. All along it was A Limited's godown. Now it get converted into B Limited's godown. Same stock, never moved. But goods are moved, sold from A to B. Areas like this or exceptional transaction like this, place of supply will be the place where the goods are located. Moving forward, last two situations, in case of installation or assembly, wherever a goods need to be installed, wherever a goods warrants a small assembling which need to be done. Let me repeat, this installation or assembling, after that installation or assembling is over, there should be an existence of a goods. To put it in a different way, the goods still should be movable. After my assembling, after my installation, after my erection and commissioning, my goods becomes immovable in nature, story is different. So my movability should be always intact. So for a wobble-free operation, a machine is fitted into a earth. Maybe yes, it requires a small installation. Yes, even then, no, as per Vastu, it should not be in this location. We have to change it to another location. I can change it instantly within no pain. Then the goods is installed. In case of installation of goods, in case of assembling of goods, the place where the goods are installed or assembled would be place of supply. Followed by, in case goods are supplied on a on-board conveyance, be it a train, be it an aircraft or a bus or whatever it might be, of any mode of conveyances, the place where the goods are taken on board would be place of supply. Respective industries would enjoy respective place of supply. Let me repeat, I am not here bothered about a catering contractor, I am more bothered about a contractor who supply biscuits to a vendor who is going to supply those goods in the train. It is wheel on rail or rail on wheel, the respective organization who takes on board on a particular train at Palakkad. Yes, place of supply will be Kerala. He takes a same load of biscuits, chocolate, this, that, everything on a train that starts from Coimbatore. Place of supply would become Tamil Nadu. So where he takes on board, or where I am going to supply and he is going to take on board, yes, that would become place of supply. So to sum up, in case of goods, if it involves movement, the destination where it terminates, if it is going to be built to ship to, the location where it is going to be built. In case does not involve movement, then it is going to be the place where the goods are stationed. Installation or assembling involved in goods, then it is going to be the site or the installation where it is going to be installed, followed by, in case of onboard conveyance, yes, it is going to be the place where the goods are taken on board. Majority of the transaction would get covered by the first general entry. In case of goods, movement is always there. Where the movement terminates, for delivery is going to be the important word that we will appreciate it over a period of time. This sums up the activities relating to section 10. Goods will get covered, all domestic transactions. You can ask me how you are conforming or refining this discussion only to domestic transaction. Very simple. When section 10 starts, its header is very clear. Place of supply of goods other than import or export. If it is going to be an import transaction or an export transaction, then yes, this section is not applicable. We have a subsequent section which we will take it up as part of international taxation discussion. Getting into the second limb of this discussion, skipping 11 purposefully, which is an international transaction. We will take it up as part of cross-border transaction or international transaction. Coming back here, in case of all those services, section 12 is the caretaker, where they are also very clear when it comes to section 12. Location of supplier and location of recipient of service is located in India. Section 12 itself will be applicable if my supplier and recipient, both of them are in taxable territory or otherwise called as India. If any one of them is going to be located outside India, then this section will not be applicable. We have the subsequent section which will take care of it. So coming back here, section 12, purpose is all services are going to be caretaken here. Where they come up and say very specifically in the general entry. Let me repeat, this is a general entry. In fact, this general entry has to be read at last. In fact, the fashion in which the section is designed is in that way. If any services is not covered by subsection 3 to subsection 14. So someone should be aware of what is subsection 3 to 14, which are all specified services. If a service is not covered by that, then the general entry will be applicable. Location of recipient is place of supply. So it is not, service means location of recipient is place of supply. If someone is not covered by those those by specific entry, then the general entry would be operated, where the general entry comes out and says location of recipient is going to be place of supply. When it comes to location of recipient is going to be place of supply, where some more facts that need to be associated over here is if someone comes out and says, I am not sure what is the location of my recipient. In my view, little rare. Generally, service providers or anybody who provide businesses, they will be aware of their recipient. In case someone says, no, I am not aware of my recipient, good. Law simply comes out and says, if he is registered person, it is easy to locate it from his GST number. If it is unregistered person, somebody came, I gave advice, he walked away. Technically, it is very rare. Someone comes out and says, general physician, or I will not call a general physician as he is exempted. I would call a cosmetic surgeon or a cosmetic consultant, where a cosmetic surgeon consultant was being consulted by a patient and he says, I'm not sure about who is my recipient. He came, I gave him solutions, whether he can go for his plastic surgery or not, and he passed by. I'm not sure about his recipient except for his name. I don't know anything. He is Rajesh Patel. Just because Patel is there, I cannot say it comes from Gujarat. So place of supply is Gujarat. So there should be some logical conclusions. Government made it very simple. If location of recipient is not available, location of supplier will be place of supply. So you know your location, no? Better you pay tax under your location. So I think all those small problems will get solved relating to general category is concerned. But where the whole discussion would go is the specified services. Between 3 to 14, all those services can be broadly categorized as a list of 4 services has to be handled differently. In fact, it has to be in a little different way. Here it has to be not 4, it has to be technically 3 services, and you will have again a list of another 7 services to be handled separately. Now what is this 7 plus 3 or 4 services what you are trying to share here? These are all specified services. Transportation of goods, I have a specific entry. Transportation of passengers, I have a specific entry. Banking and financial services, I have a specific entry. Insurance, telecom, or it is going to be training and performance appraisal, admission to an event, organizing of an event, restaurant services, outdoor catering, or it is going to be beauty treatment, immovable property based services, or it is going to be government advertisement services. These services, they specifically come out and say, if my services is something to do with government advertisement, then I have a specific place of supply entry and I have to determine place of supply only based on that. If my services are something to do with transportation of passengers, then my place of supply is different. My transportation service is something to do with goods, then my place of supply is going to be different. So every service that we discuss here has a place of supply. To start with, immovable property based services, very specific entry. I would only recommend only one aspect here. If we find it domestic transaction as little comfortable, that is to make it differently, section 12, when we make ourselves little comfortable, I think section 13 will fall in place automatically, because all those aspects from here only borrowed and pasted there. Only difference is it's going to be in the international arena, this is going to happen within the Indian arena. Beyond that, nothing great. Points here are: 1. Place of supply in case of immovable property based services. Whenever any services directly connected with immovable property, could be renting, could be leasing, could be hotel accommodations, could be construction, could be architect, could be any technocrat, technical study, technical aspects associated with immovable property based services. Place of supply will be the place where the immovable property is located or intended to be located. As simple as that. If a immovable property is located in Tamil Nadu, then place of supply is Tamil Nadu. Though the architect might be located in Bombay, but immovable property is located here. When somebody is going to actively involved in a construction of an immovable property, yes, place of supply will be the place where the immovable property is located. As simple as that, an architect firm in Chennai constructs a mall in Kochi. Place of supply will be Kochi. Very interesting to note, the construction company who gave the architect work will be located in Tamil Nadu. So at that time, you will not use this language called as supplier Tamil Nadu, recipient Tamil Nadu. No supplier recipient relationship here. If my services has some direct nexus with immovable property, or my services are something to do with expert services or agent services in connection with immovable property, place of supply will be the place where the immovable property is located or intended to be located. When we have all this in line and place, it could be for any services. We can list all those services. Something has its connection with immovable property, all those services, place of supply will be location of immobile property. In case immobile property is located outside India, a very rare example where we will have a supplier in India, recipient in India, but immobile property alone what? Outside India. Rare. I am not saying it is impossible, rare. If that be the situation, the location of recipient will be place of supply. Let me repeat, location of recipient will be place of supply. It is not the location of the immobile property. No, property itself outside, how you can tax, all these questions cannot be raised. They made their point very clear. If immobile property outside India, then place of supply will be the location of recipient. Coming back here, government comes out and lists certain services. You don't ask me why and all. They have listed these services. Restaurant, outdoor catering, followed by beauty treatment or personal grooming. Of course, health and fitness services. In case of these services, the place where the services are performed, that would be place of supply. They never bothered here about location of recipient at all. Always they will not bother about location of supplier. Due consideration has to be given weightage for recipient. They never bothered about recipient at all. They simply made it very clear. The place where you perform the service. I am an outdoor caterer. I am located in Tamil Nadu. I went to all the way to Kerala to do outdoor catering activity. Good place of supply is Kerala. No, I have a restaurant in Tamil Nadu. We are a chain of restaurants having different brand location. Every restaurant, place of supply will be the respective locations. Same in the case of beauty treatment. Government don't want to make certain things more complicated. They made it, these services, we being government, we are confirming these services, location where the services are performed, that would be place of supply. If you perform the surgery here, then place of supply is here. A particular, when I discuss from a healthcare perspective, I am more discussing from its cosmetic angle perspective, not from its general perspective, as it is generally getting exempted. So coming back here, maybe a person would have travelled all the way from northeast to Tamil Nadu for a sole purpose in this place, very specifically this particular hospital in Chennai is famous for doing all this cosmetic surgery. They have treated more than 5,000 odd patients on this cosmetic surgery. Now I will obtain from him all breakups. All breakups under earth means all breakup and all information I will have. One such information is going to be his KYC. Where from there I could able to say he is a person all the way comes from Manipur, all that stuff. Now at that time no question of IGST transaction, my recipient outside India, B2C, IGST, nothing doing. Surgery is performed here, place of supply is here. So he comes in flight, he goes in flight, and all is his headache. My intention is looking at little from a government perspective. On these transactions, respective state government will start earning revenues. It will not be the intended state government. Moving forward from that perspective, beyond that there is nothing gained over here. In case of training and performance appraisal services, in fact, after this only two services we will have single answer. Later that we will have two answers. What do we mean by these two answers? If you are a registered person, my answer would be different. If you are an unregistered person, my answer would be different. To put it in a different way, training and performance appraisal services, let me repeat, training and performance appraisal. So it's not vanilla training services. I train, I walk away, you follow, you don't follow, I am least bothered about it, then that is not training and performance appraisal. So in case of training and performance appraisal services, which is generally part and parcel of this HR related activities, the location of recipient would be place of supply if the recipient is a registered person. If my recipient is unregistered person, the place where the training and performance held would be place of supply. So this place of supply or this service will have two answers based on recipient being registered or recipient being unregistered. If my recipient is registered, then the place where he is registered. Recipient is unregistered, then the place where it is held would be place of supply. So, except one more entry we will have for event, admission to event. Yes. Except this entry, every other entry afterwards will have two answers. This only one entry will have only single answer in case of where there is going to be an event held and a money is being collected from people to admit people into the event. The place where the event is held would be place of supply. So it could be anywhere. So it could be an educational event, it could be a sporting event, it could be a cultural event, it could be this show, that show, national award function, that award function, all events. The place where the event is held in case of admission. I collect a money for admitting people. The money is collected purely, solely for the purpose of admission. I don't do anything beyond it. Pay me so and so amount, pay me 500 rupees, I'll admit you in. My work will stop by collecting 500 and sending that person in. Admission to event, yes, the place where the event is held. In case of organizing of event, where every responsibility in the event falls on this person's head. He need to manage the crowd, he need to ensure adequate security personnel are deployed, maintenance of audio-visual, maintenance of stage management, MC, this, that, every aspect of the event is in this fellow's hand. In case of organizing an event, if they are event organizers, then if they supply these services to a registered person, location of recipient will become place of supply. If they supply these services to an unregistered person, then the place where the event held will become place of supply. So in case of organizing of event, the decision will be based on whether a person is registered or unregistered. Again, place of supply will differ. When my place of supply differs, let me repeat, my answer would also differ. Supplier Maharashtra, recipient Tamil Nadu, event held in Maharashtra. Place of supply will be interstate supply. Place of supply will be Tamil Nadu, and if the recipient is registered, my supply will be an interstate supply. To the contrary, if the Tamil Nadu recipient is going to be an unregistered person, then my place of supply will become the place where event is held, Maharashtra. My transaction would be an intrastate supply. So this is where the game will start relating to it. And as I say, need to be little conscious on all these aspects and to handle it. Moving forward, in relation to transportation of goods, we had an amendment sometime during February 2019, where when it comes to transportation of goods, two answers: recipient registered, location of registration, place where he is registered, location of his business. If the recipient is unregistered, the place where the goods are handed over for transportation. Now this created one small problem. Problem is, where goods are handed over for transportation in Delhi and goods goes to USA. Goods are handed over for transportation in Tamil Nadu and goods goes to Hong Kong. Goods are handed over in other state and goods goes outside India. A doubt came, what is your place of supply? Is the place where it is handed over, even in case of B2C transactions or B2B transactions. To overcome all these difficulties, where amendment was made, in case the destination of goods is going to be outside India, place of supply will be the destination of goods. Because it is outside India, transaction will get converted into a interstate supply. Let me repeat it. How it will be interstate supply? Very interesting to note. Supplier will be located in Delhi. Recipient also will be located in Delhi. But goods are handed over for transportation, and that goods is going to go to a place outside India. Then the place of supply becomes the place where the goods are going to be sent. Bringing this is not any place in India. Obviously it has to be a interstate supply, and after February 2019, every foreign shipments they started to charge IGST, a little welcoming move, because every organization can start to avail input tax. For various strategic reasons, their job workers were located in another state, good went to that location. From that location, goods need to be exported. Unfortunately, this fellow told, no, you are doing for me only, no. Yeah, I am doing for you only, but I am taking the goods at what? My location, not at your location. Enough confusions have been created here. To overcome all this was a favorable move. Moving forward from one of the amendment, that was the only amendment made in place of supply, followed by transportation of passengers, a very simple entry, the place where the passenger embarks for a continuous journey. Two words important, the place where the passenger embarks and a continuous journey. In case we have clients who deal with transporting passengers of either bus or aircraft, as the case may be, then yes, we would be handling them little differently, where if the recipient is a registered recipient, place of supply is location of recipient. Always, if the recipient is registered on all these services, 6-7 services that we have in the third list, always place of supply will be location of recipient. Problem is, if the recipient is unregistered, what would happen? The place where he embarks for that journey. For example, if it is going to be a Chennai-Goa bus, a bus which moves from Chennai to Goa, if it is a registered person, I will not bother about the journey at all. I will be more bothered about where is the recipient located. My recipient located, that will become place of supply. In case my recipient is unregistered person, then the place where he embarks into the bus, he gets into the bus at Chennai, Tamil Nadu, place of supply will become Tamil Nadu. So that activity becomes more important only on this ground. Beyond that, absolutely, I think great here. In case of telecom services, every single issue in this industry is getting resolved, where first one was in case of lease line, in case of equipments that are being kept for the purpose of telecom or satellite line connections. Very comfortably they told, if you have installed an equipment, then place of supply is the place where the equipment is installed. No, it is not lease line, it is a regular line, just postpaid billing. The person to whom you are going to bill being a registered person, that becomes place of supply. No, it is a prepaid billing. Good. Again, the address available on record. Let me repeat another word, address available on record. The supplier definitely has the address of the recipient, based on that place of supply will be determined. No, we give vouchers, all this. The distributor to whom you sell, that becomes place of supply. Every single aspect of telecom industry is taken broadly to discuss. If it is based on equipment, then the location of equipment. If it is based on customers, then the address of the customer will decide a place of supply relating to a telecom industry. Banking insurance will go in the same fashion. They have an address of the recipient, that becomes the place of supply. Or if the supplier has shared his GST number, then the location of the registered recipient will become place of supply. So, coming back here, going back to this third slide which I was referring to, organizing of event, transportation of goods or passengers, on-board conveyance, which we will take it up sometime later, that is not relevant now. Ignore on-board conveyance and advertisement. telecom, banking, financial services, insurance, and training and performance-based services. Training and performance-based services, organizing of event, transportation of goods, transportation of passengers, telecom, banking, insurance. These 7 services alone will have 2 answers as place of supply based on recipient being registered and recipient being unregistered. And very interesting to note, my answer as place of supply differs, my levy as to intrastate supply or interstate supply will also differ. Let me repeat, that will differ, completely differ. If I am a recipient, receives goods in Chennai from a transporter who transport goods from Maharashtra, I being a recipient, registered recipient in Tamil Nadu, my place of supply will be Tamil Nadu. I am an unregistered recipient, individual, and I receive some services of transportation from a person located outside my state, and I have handed over the goods to him there. I think that is where the origin points begin, and the place where the goods are handed over outside the state, that location becomes place of supply. If that locations become place of supply, for that supplier, he has to charge as intrastate supply, not as interstate supply. This is only catch over here. Beyond that, absolutely nothing great in all these aspects. Why this topic again gains its momentum? Just to distinguish the difference between place of supply, intrastate supply and interstate supply. In case of advertisement services provided by government alone, one problem, pan-India, government gives advertisement. Today is the last day for paying advance taxes, pay your taxes promptly, ensure. Today is the last day, or only 20 days is left over to file your income tax return. Pan-India advertisements are given on national journals and national daily. When a national daily gets a pan-India advertisement from income tax or from GST department, or it is going to be any other scheme of government, they fix a fees to collect a revenue. Now this revenue is no doubt received by the head office. And head office received this revenue, raised the invoice to government, all that is okay. How it is going to get distributed to all those places from where printing is done and states which are all distributed. 16 states, 18 states, 21 states, advertisements are getting distributed at one single shot of this, signing up an agreement with this company. In cases like this, based on circulation of papers, revenue need to be distributed, and based on that, invoice need to be raised. Let me repeat it, this will not be a problem when it comes to a registered or a private limited, any other company or any registered person perspective. This would be a challenge because my recipient of service is government and I need to advertise in this particular way. This sums up our whole discussion relating to domestic place of supply. Any questions? Yes, I would take it up. Otherwise, we can get into a very important area called as place of supply. Again, of course, section 11 and 13 will be in our discussion. Can I move forward? Yes. Before getting into more specifically on section 11 and 13, 2 words, in fact not 2 words, 4 words. Import of goods, import of services, export of goods, export of services. On that, 2 specific words, import of goods, export of goods. Nice words. Taking goods from a place outside India to a place into India is called as import of goods. So they have verbatim followed the definition of customs under GST also. Section 2 of IGST Act would come out and very specifically word import of goods with a grammatical variation and cognate expression, taking goods from a place outside India. You bring the goods for whatsoever purposes of your wish. we are least bothered. If you bring the goods from outside India, it is treated as import. Similarly, goods goes from in India to outside India, yes, it would be treated as export. So, very simple definition. From a place of supply perspective, very, very easy. Import of goods, location of importer is place of supply. Export of goods, the location where the goods are exported. Don't say location of exporter. Location of exporter will be here only. The place where the goods are exported. USA, Thailand, Spain, France, whatever be it. Location of my exporter, the place where the goods are exported, that would become place of supply in case of export, and the location of importer will become place of supply in case of import. Of course, this is more relevant from the perspective of import transactions alone. Beyond that, import-export transactions alone. Beyond that, nothing great here. Getting into the next two important entries. In fact, this is little more important on a reason being import of service. Probably in our earlier sessions, they would have highlighted to us there is a reverse charge on import of services under section 9(3). Yes, there is a reverse charge which need to be paid by the recipient. What is import of service? Supplier of the service should be located in non-taxable territory. Recipient of the service should be located in taxable territory, and place of supply should be located in taxable territory. Let me repeat it. My recipient should also be in India. Place of supply should also be in India. See, with due respects to our people who are going to come review as officers at a later time, see, it has to be little technically approached. My problem here is location of supplier is outside India, location of recipient is in India, my place of supply is outside India. Possible? Yes or no? Yes. It doesn't mean my all foreign currency expenditure are import of service. Correct? Similarly, not all foreign currency gains are export of service. I'll rephrase in this way. It has to be understood from each case to case basis, where I will receive a foreign currency receipt, but unfortunately the transaction is so well designed, location of supplier should be in taxable territory, India, location of recipient outside India, place of supply outside India, money should come in foreign currency, both supplier and recipient are not distinct, both of them should not be distinct person. If I satisfy all these 5 conditions only, then it will be treated as export of service. One of my condition is I should receive money in foreign currency. Problem with some of us is I receive foreign currency, I receive foreign currency. Correct, you receive foreign currency, no doubt. But receipt of foreign currency alone does not make a transaction export. Payment in foreign currency alone does not make a transaction in import. It's all based on this game which need to be played in each transaction. My location of supplier, place of supply, and location of recipient. That 3 are the point over here. And import and export both are different. Moving forward, same principle, where subsection 2 will come out and define all those transactions between 3 to 13 will be categorized only by that section. Any transaction which are not covered by 3 to 13, then only it will be covered by general entry. General entry is the easiest entry. Location of recipient is place of supply. I am a software company. I supply services, software services to a foreign fellow. Good. You supply to foreign fellow. Both of you are different. Yes, we are different. He sends you money in foreign currency. Yes, he sends money. Location of supplier, Tamil Nadu, exporter. Location of recipient, software company located outside India, money comes in foreign currency, place of supply, location of recipient. I covered by my general entry. When I would be covered by my general entry if I am not covered in any of those specified services? Do we have again a list here? Yes. Same you will come across. Immovable property based services, event based services, performance based services, special services such as intermediary, hiring of motor vehicle, NRO, NRE account holder, transportation of goods, transportation of passengers, on-board conveyance of services. In case of the specified transaction, general rule will not be applicable. We have to go only by the specified rule. In all other cases, general rule will be applicable. So, points to be noted down over here is to start performance-based services. What do we mean by performance-based services? Any services that are performed on a goods or performed on an individual who is going to be the representative of recipient of service. Let me repeat, he is not the recipient of service. He is the representative of recipient of service. What do you mean by this? In case of a modeling firm, the model on whom the makeover services are done, that model is an individual who represents the recipient of service, modeling firm. So, it could be transactions of this nature. It is a film where the main cast and crew need to be did some special makeover services. There is a team who comes all the way from foreign country and does some makeover services in India to that main cast and crew. Yes, the services are provided to an individual and that individual is a representative of recipient of services. In case of any services provided to a goods, any services provided to a individual who represents the recipient of service, place of supply will be the place where the services are performed. So it could be inspection, it could be certification, it could be testing, it could be any services connected with the goods. Where is your goods located? First question. Our goods located in Bombay port, sir. We went and inspected the goods. Everything found correct. Everything was as per the specification, as per the foreign country. We signed and issued a certificate to UK company. Technical consultant in India provides services to UK company. But the mission was in Bombay port. Place of supply will be Bombay. Location of supplier, Tamil Nadu. Location of recipient, UK. Place of supply, Bombay. Why? Performance based services. Services has a connection with the goods. Because the services is performed in Bombay, though from UK I get in sterling, foreign currency, my activity will be leviable to GST. Let me repeat, my activity would be leviable to GST. Can you be able to appreciate a situation like this? See, easiest example is the machine is not in Bombay, machine is in Dubai. I think I don't need to discuss with you all at all. If the machine is in Dubai, then good. Place of supply is what? Dubai, non-taxable territory, export of service out from the net. Now that is not the challenge here. The challenge is different here. The mission is in India. I was engaged by a foreign company to go and inspect a mission in India. Then my place of supply is India. Though I receive money in foreign currency, I am liable to pay tax under GST. Because this is not an export of service. Export of service definition very cleverly told, supplier should be in taxable territory, recipient should be in non-taxable territory. Brother, I am tallying both, correct? You tallied both. Place of supply should be in non-taxable territory. Here place of supply was taxable territory. Here was, or here it is, we have the biggest challenge. Okay, I will pay tax, agreed. Okay, pay tax. What tax? Intrastate supply, interstate supply. Location of supplier, Tamil Nadu. Okay. Place of supply, Bombay. Then it becomes what? Interstate. example was little easy, correct? See, first of all, to accompany some of us are thinking still these transactions are export. That need to be broken. Okay, that was broken now. Next, to decide whether it is intra or inter, little change in my example. Same UK company, same technocrat of Tamil Nadu, this time machine imported in Tamil Nadu. Correct? Good. Place of supply, Tamil Nadu. No doubt. Transaction is leviable to GST. Intra, inter. Can you be able to appreciate the situation here? It is intra-state supply or interstate supply. This is what we are fighting here. We have challenges straight away out here. There are views which would come out and say, no, this has to be an intra-state supply. Again, there will be a group of people, no, it is what? Interstate supply. Location of supplier and place of supply both are in what? Same state would be the easiest answer. But however, we have to carefully read section 7, which comes up with lot of subjectivity associated with it, and section 8, which comes up with lot of subjectivity associated with it. And we have a notwithstanding provision in section 7. Keeping all this in mind, again, group A of experts will say it is interstate supply. Group B of experts will say it is intrastate supply. Now, who will give the final verdict? 4 years from now, court. Okay. As of now, somehow assessee is liable to pay tax. Let's take, based on each facts, decisions and close it. Mainly 13.3 performance-based services and 13.8 all those specified services, intermediary services. To put it in a very layman's term, commission agent services or intermediary services. There and this services we have litigation. On whether it is intra or int, that doubts still exist. 1, 2, 3, 4 we have checkpoints to say it is inter, 1, 2, 3, 4 we have checkpoints to say intra. Again, facts, circumstance, additional information, all decides whether it is intrastate supply or interstate supply. But nice times are ahead when it comes to all this. First, to accept a client after getting money in foreign currency to pay GST itself is a tough task. Let me repeat, it's not an easy task. Very, very tough task, because the way in which it was propaganda was foreign currency means no GST. That is what it is understood. I receive foreign currency. So what? Your place of supply is in India. Just because an immovable property is in India, and they get money from foreign country, because from foreign country organization, a particular federation comes and conducts its match in India, and money is received by this organization. I provide service to foreign country. We are a trust. We are encouraging sports. You encourage everything. Also pay GST and encourage everything. This is how some of the decisions are being taken. But again, having decided to pay GST, okay, I'll pay your 18%. Now you say me, it is 9 plus 9 or 18 at one go. See, let me repeat. These are all questions which are all still open on the arena. Answers based on various aspects associated with it. To keep upon all this. Now, this is one level. Upon all this, they went and told, if any services provided by electronic means. Let me repeat it. This is a very vague word. See, I can really appreciate electronic network, which is at least defined under Information Technology Act. Electronic means there is a consultant in Japan, senior consultant. One of the client has imported a machinery, and this client who has imported the machinery, installed the machinery, technocrats from Japan fly down to India, they assisted him, they did it. The machine is done, installed, machine is running. But one unique problem is it is a corrugated plant, and after particular meters of corrugated flute, automatically the paper is getting cut. And again they need to run. Because of this, little wastage happens. Somehow the organization was not convinced on this one point at all. Why that 132nd meter it is getting cut? They also studied that. What is the problem here? these technocrats tried to fix it, but they said, see, beyond this, it is not in our scope. I think some alignment problem and all in the mission, we have to refer to a senior consultant. Senior consultant was in Japan. He said, I will not fly down. Senior consultant told, he is a freelancing consultant there in that country. He told, you pay me 1 lakh yen, then I will come and sit for the conference. Skype conference, video conferencing was called for, and through Skype, through this, that, all that, he got connected, did everything. My issues are all not on all this. The problem was fixed. After the problem is fixed, he raised his invoice. Invoice reached here. Place of supply is Japan or India?
India.
He never fly down to Japan, India at all. Can we able to appreciate this problem? I do the whole work here, let me repeat, I do the whole work here and send one mail. I ask somebody to work on behalf of me and send one mail. Now let me repeat it. From the technical consultancy edge, these are all going to be the future issues, where electronic means is a wider term than the erstwhile service tax regime electronic network. Erstwhile service tax regime, we had electronic network, which is definable. I can understand. Sitting at Bangalore, I will configure the firewall which is located in Finland. Sitting at Australia, I will configure a server or a mainframe server located in Bombay. It was meant to handle those kind of transactions. Lightly tilting this word from electronic network to electronic means brought all the transactions into the arena. Now, any transactions which are all done through electronic means, which there is a basis of asset. See, it is something like this. You configure your system like this. Somebody in the foreign country sends one mail here, and this fellow opens, here it has to be like this, this has to be like this has to be like this has to be like this, fixed, and said, yes, done. For which some dollar payments he made. I think this fellow is into the loop. Now, these are all the challenges that we have. Again,